Good morning, welcome to a Monday, a very strong Monday. Maturin already telling us all about his huge winners, and it is the 27th of October. With me today, the best of best men. It is Luke Moore.
Nice. That's a good write-up. Thank you for that. There's everybody should come in here and just get pumped up by you one day, just because it makes you feel good and loose for the day. Good morning, everybody. How are we all? Hope you had a good weekend.
We had very different costumes on over the weekend, Luke.
You and I?
Yes.
Well, I had no costumes on.
Well, yes, you did. You had your very smart suit. Was it not your best man weekend?
No.
You just posted the picture.
You're referencing my Instagram dump that I did on Saturday afternoon. I did. I basically had to catch up. I got a friend of mine who's just, she's very good at posting like a month at a time.
Right, okay.
But about 3 or 4 months late.
Oh, you're such an influencer.
So I just thought I had to catch up.
Right, so was this wedding the one that had been the stag, the secret stag?
The secret stag that ended up being Palmer in Mallorca. But yes, that was actually, when was that? Start of September.
Well, how was the weekend? This weekend then?
This weekend was much more relaxed.
Right.
Much more relaxed. I saw Sarah on Friday.
Oh yeah, of course.
Which was great. Saw her. So she's looking forward to
Charlotte, all
back
good?
next week. So she'll be coming back. Baby Charlotte was asleep. Didn't see Baby Charlotte, unfortunately. And then yesterday, so we basically had 2 people cook us dinners this week. So Sarah cooked on Friday, and then we went to see some friends that have just moved to Hampton Court.
Oh, nice.
Long way away though. Sunday service trains getting back was an absolute pain.
Yeah.
But yeah, beautiful roast. So yeah, it was very. I'm going to say it was different to your weekend. So come on, tell everyone what you got up to.
So the old Halloween party went well. We'll get a picture up for you a bit later on.
Have we got a photo?
But it was good. I didn't go with Rachel Reeves in the end. I went with, from Celebrity Traitors, which we know you don't watch.
Yep.
The gold mask with the brown, like kind of monk hood outfit. Yeah, it was very good. But, of course, the clocks changed,
yes,
right? So, perfect. Mm-hmm. So I thought, right, I'll go for a cheeky McDonald's on the way home. Got the McDonald's, walk onto the platform of the Piccadilly tube, and the doors are just closing, and it goes, and it's 10 minutes till the next one at 2 o'clock in the morning.
Oh, that's tough.
So my clock change was spent sitting on the platform of the Piccadilly line.
Is it when it went to like midnight and then it goes back to midnight again?
I think it's 2 a.m. Is it?
I don't know. Is it?
Yeah, I think 2 a.m. It goes back to 1 a.m.
Fine. Well, I sent a text out to all my clients on Friday being like, don't forget about the clocks. All the markets on Sunday are going to be opening an hour early. But I said, I think I got it the wrong way around. I was like, you're going to have an hour less in bed. Everybody came back being like, no, an hour more in bed, you idiot. Stop trying to gaslight me.
It's honestly, it's the best weekend of the year.
Yeah.
It is just, I mean, everybody this morning, how nice was it waking up this morning without that the darkness and getting dragged out of bed?
Yeah, but you've only got it for about, a week to 2-3 weeks before you go. All of a sudden,
chewy chops.
You're getting in on a Monday and it's dark. You leave the office and it's dark.
Yeah. Maybe the guys will remember to send out the notification at the right time as well then. You're on air in half an hour. I was still in my house and it came up, Trade Live with IG on air in half an hour. Like, oh, sugar.
We're going to be busy.
Yeah.
Good. Well, I'm pretty sure it was a quiet weekend in the markets. Nothing really too market moving.
No big moves.
No.
Free money again on weekend markets. It's the gift that doesn't stop giving.
Yeah. That's why we built them. We built them for these types of weekends. I mean, we specifically built them, I think, in response to the Greek debt crisis. If like kind of all these things years ago.
Wow. 2014.
Maybe it wasn't that long ago then. It was definitely in response to a politics issue, which is why we started pricing them up. But it's, right. I mean, I saw
Brexit.
When it was before Brexit, way before that.
Oh, so it was maybe 2014.
Yes, it may have been the Greek. Anyway, so that all, I got the notifications. I was getting off the bus in Hampton Court, just about to go and sit down for lunch, and just saw Besson's face plastered across my Twitter feed. All caps, deal done, framework, straight onto the weekend markets, and you could just see them tick up.
Yeah, that was me.
Just see it.
Yeah, NASDAQ was 25,500 offered. So you're now 166 points higher than where you could have bought it half an hour after those headlines came out if you got onto the weekend markets on IG. So that was, thank you very much. There's nothing like taking money off your employer at the weekend. I really enjoy it.
Because it's the guys that are making the market themselves.
Yeah.
Brilliant.
Right, producer Phil's getting angry because we're not telling you what's coming up in today's show, so let's do that now.
Too much yapping. What have we got coming up? So I will be here through with you through till just before 8:20. We're going to have a little bit of guess the chart once the market is opened, and then Beachy is going to give us his trade of the week, and he's already been out there on Twitter spouting a few things off this morning.
Has he?
He's already out and about. I know he's open. I know he's awake, and he's on the case.
He must have been on BBC at 5:30 a.m.
Yeah, could be.
So yeah, technically speaking then at 8:25. And then we've got Garth McKenzie. So my good old trading nemesis, Garth, is up there at 9 a.m.
Nemesis?
Well, yeah, because we don't tend to look at the market in the same way. So it's...
Well, I know you're bearish and he's probably bullish.
well, no, it has differed at different times, the way that we look at things.
So should we check your temperature? Where are you at specifically this morning? After having a bit of a moan up on Friday, inflation, China, can I just check?
Sorry, we can also, the fact inflation came in at 3% instead of 3.1 has sent the markets to the moon. But, well, I'll tell you where we are. So let's look at the portfolio update at the moment. So here on the long side, we're long Pfizer. That's, of course, one of Piers's. Then some Illuma, some Marvell Technology, same as Maturin. Maturin, very happy to report it was up 2% this morning. I'm long a bit of Nvidia from Thursday. Long Oracle, that one's been bad. I'm long at 304. It's now trading 287. Long a bit of Apple, but against that, some short calls. I'm long some Dogecoin, Solana, Ether, and Bitcoin.
Nice.
From the weekend.
The suite of cryptos.
And then long some, well, I've got the tech that I mentioned from the weekend.
Yeah.
Where is that? That must be further down.
But I say you've got a good kind of. Well, you've woken up this morning and felt a little bit. Yeah.
So
a little bit bullish.
And then on the short side, and I've got some S&P as a hedge as well, because of course I am massively short the S&P calls. I'm short some Starbucks down there and short some Robinhood calls at the 160 level. But the main one is the S&P 500 calls that I'm short. So that's where I'm getting murdered. I am short the 6800s. They're now trading at 344. So the break even's 7,144. I'm short the 6850s, the 7,000s, the 7,200s, and I am short in absolute size on those. So you can see if you put it together, I'm probably down about 25 grand on those.
Yeah, that looks a little expensive.
But of course, you get paid that back every single day.
Yeah, of course, because of the time decay.
Because my 6,800 is obviously roughly where we are, 6,850. Yeah. So I just want it to go sideways. It goes sideways and I get paid 25 grand back as we gradually go on. But
let's hope so.
Of course, you've got the long positions on
the cash.
Yeah. So as the market kind of drifts higher, you're trying to make money to pay and get your theta.
Yeah, so a long covered call there.
Exactly. So basically a covered call.
Yeah. Strong.
Good. Right. Let's go into some overnight action and have a look exactly what did happen on Friday and why futures are up to the races this morning. So the most important one to look at this morning is Japan. Japan going through 50,000 for the first time ever, not long after it's gone through 40,000.
That's one hell of a move, isn't it?
That's brilliant.
That's one hell of a move. What was that crash? Because that April crash looks of a decent sized percentage from the top to bottom there. So what did it crash before it roofed? So actually, you're not looking necessarily at the month to date, the year to date. You're looking at the top to bottom, right?
Ken, why did it crash in April?
Well, because of tariff man, right? That was.
Sorry, I thought that was the question. Yeah.
No. I'm saying what was the percentage? So what did it?
Right. Okay. So 4,000 to 3,000. So 20%.
20.
And then, which is exactly the same as the August the 5th last year, when of course we had the carry trade. So it sell off pretty much point for point.
All the way down to exactly that. Wow.
40,000 to 30,200.
Congratulations to the Dow. Congratulations to Nikkei, because it hit 50,000 before the Dow did.
Yeah.
To consider it a race. You've got the Dow trading at 40, what are we at? 48, 49 something. You've got 47,550.
For those of you that think that Dow matters.
Oh, I know. I have that argument with so many people so often. Price weighted, mental, completely stupid.
It's irrelevant.
Completely irrelevant. But look, this morning, what have we got? We've got equities naturally pointing higher, gold coming off as risk is being priced back out of the market, oil fairly unchanged, silver following suit.
Isn't it great to see that gold is actually back to trading as it should, in a logical fashion, that gold is down this morning to 4,070. So we're now 10% off the highs.
Yeah.
And doing exactly what it should be doing. Bitcoin, on the other hand, up 1.9.
Yep.
So going to be keen to watch Smarter Web this morning. I bought some at 60 pence on Friday.
Nice. I'm not buying any more. I put my risk capital in it and losing a little bit of money.
I love the arms have gone folded.
So I'm not buying any more. I'm not going to throw good money at whatever's offside 50%. So let's leave that where it is.
It's called averaging down, look.
It is called averaging down, yeah. I've got no more cash in my ISA, that's the problem. It's interesting to see the rest of the commodity structure play out, right? So you've got soybeans moving higher because Chinese demand is all of a sudden going to come back in. You've got copper moving higher. We've got aluminium moving higher as well. All these things that are part of the the global supply demand industrial trade are all moving higher because this risk is supposedly being priced out of the market. So it's positive if you're a farmer, positive if you're in some way exposed to anything to do with this China trade deal. So what do they?
Apparently not if you're a chicken farmer.
Oh yeah.
Well, as we see the front page of the Times this morning, we've got the two sisters founder complaining that there's I think we've got a computer down.
Oh, yeah.
There we go. So he's having a right old moan up this morning about the government ignoring the needs.
What's this?
Two Sisters, the biggest chicken farmer producer in the UK.
Okay, I didn't know that. There you go.
So
that's news.
Quite a. It must be a fairly quiet weekend for the Times.
So what's his beef with chicken farming or with
very good
with everything what's going on?
Well, he reckons that everybody's too focused on private equity and they risk a food crisis because the food chain, these companies are not being looked after. So as I say, it's a bit of a, I don't know.
Would you say
dead story this morning?
Would you say he's chickened out of it? I did. That was Phil's joke.
Chickened out of what?
Chickened out of. I'm not sure.
I think the Times have produced out of a good story this morning.
Thanks for producing me that one, Phil.
Right, chart off, guys.
I tell you what is probably worth looking at this morning, though. What are we going to look at today, given the tariff story, given the China story? And so there's a really good piece this morning on Bloomberg. If you can jump my chart on my screen on here. So this was lifted, a screenshot from the Bloomberg terminal this morning.
Can you zoom in?
I will zoom in on the text so we can see. Ooh, too far. Right. So there's a bit of a story on what's going on, but I think we can all read. This is what is interesting. What shall we be watching and what are we going to watch at the Open? Car makers such as Stellantis, Mercedes-Benz, BMW, Volkswagen. Drinks manufacturers that have been sensitive to the tariffs. Diageo, Cointreau, Pernod Ricard. Shipping stocks, Maersk, Hapag-Lloyd. In the UK, we're going to be looking at the miners because of this strength in the metals. Rio's, Anglos.
Diageo hasn't been volatile in the back of tariff news to China.
Exports? Demand?
No.
Well, I mean, it's a company that exports all around the world. I wouldn't be surprised to see it on the list.
But it's out the UK. So why is Diageo going to have tariff problems with China?
Because they distribute
This is AI generated and is utter bullshit.
Language.
Drinks makers aren't going to be sensitive to a US-China trade deal when Remy controls French and Pernod Ricard's French.
But they don't sell into China, don't sell into the UK. Of course they do. 100% they do.
Yeah, but
My friend works for Diageo in Singapore.
No, but this is US companies and Chinese goods. This isn't UK to China tariffs. So that's just AI generated.
You're going to call this slop?
Yeah, because it's a US-China trade deal. The mining stocks, yes, I completely agree with that.
Okay. The bottom one then, I do agree with all of the luxury goods, luxury companies.
Yes.
Because if one would imagine what this is referring to is the Chinese domestic demand story. And so are people going to now go out and buy more luxury goods? Are people going to go
Let's see how much Diageo is up on the open on the back of this hugely positive story.
Okay, fine. I wanted to give people a watch list to have a little look at. So feel free to take a look at the watch list, even though Rich thinks it's utter nonsense. I think it's worth keeping an eye on.
It's miners, yeah.
Definitely. Okay. Next story.
Well, the next one is HSBC. So HSBC set aside 1.1 billion on the back of Bernie Madoff. Now, Madoff story. Oh, you gone early on the Times again by the looks.
Madoff or Madoff? I thought it was Bernie Madoff, wasn't it?
However you want to pronounce it. Setting aside 1.1 billion. It looks like the computer's running a bit slow this morning on the Wi-Fi. 1.1 billion fraud claim. So HSB taking a hit on that, which is interesting, making a provision after they lost a court case. So that's. I've
not heard that name. I've not heard that name in such a long time.
Yeah,
such a long time. 1.1 billion, is that big? I mean, what's the market cap on HSBC these days?
It's not necessarily huge, but it certainly is.
It's a $172 billion bank. It's one of the biggest companies in the UK. I mean, it's weird. It's an odd story, I suppose, because it's completely out of the blue. If I get any early calls, I will let you know.
Certainly wouldn't have expected that if I was an HSBC shareholder this morning.
Not any. I haven't got any early opening calls. Burberry have been tipped as a buy in the Midas column of Daily Mail this morning. So they're playing the same game that Bloomberg is, likely looking at the luxury sectors. What else have we had? We've had some news from GSK. They've acquired the rights for a prostate cancer drug. That's going to be interesting for them. Petrofac, they've applied to the High Court to appoint administrators of Petrofac Limited.
Yeah, so we got that story, if we can get it up, guys. Petrofac, of course, the shares were suspended, weren't they?
They've been suspended for a long while. PFC, yeah. Based up in Aberdeen, I imagine. Yeah, 2,000 jobs at its North Sea hub in Scotland. They have finally long appointed administrators, so not good for them. But if you've got the stock, effectively you can't do anything about it because you've been suspended for a while, which is a bit of a shame.
Yeah, that's been a shocker there. But yeah, it's strange, isn't it? Because you would think that oil and gas companies should, no matter what, you should be just able to keep that the business going. But the North Sea has just been an utter disaster because of the government.
CC John Wood Group.
Yeah.
I mean, that's pretty much looking down the barrel of the same gun at the moment. Tough up there. My father-in-law runs a marketing agency up in Aberdeen, and he says, it's just been brutal up there, completely brutal. All of his clients were these offshore guys, and he said it's just been a tough time. So let's see if anything can turn up. I mean, they need to change the policy of the North Sea. We're the only country in the entire world that doesn't seem to have its own energy supply. Or at least, we're the main kind of drillers in our own energy supply, which is tough. Andrew McKelvey, I can see you in the chat there flagging Greatland Gold. So they've had some numbers this morning. Their quarterly activities reports come out. They've produced 80,000 ounces of gold, 3,400 ounces Cu. Is that copper? Cu?
Yes.
Copper. And they've got closing cash balance of 750 million Aussie dollars. So that looks positive for them. And what else? Is there anything else we need to flag?
Funky Gibbon makes a good point. Will rare earths take a hit this morning? Well, yes, of course, because Scott Bessent agreeing a framework with China ahead of Trump going down to see Xi. So, US rare earth stocks should most definitely take a hit this morning.
So what are we looking at there? MP Materials or the other ones?
Yeah. Anything?
Pensana potentially. Yep. Pensana here in the UK.
Yeah, let's we'll have a look how the Aussies traded overnight there.
There's also been other deals. So I saw a headline this morning. I don't have the story, but China and Australia have agreed to kind of de-escalate trade concerns. So that's why the Aussie's up this morning.
Fantastic.
So that's good. But Trump's, of course, having his grand tour in Asia. So
We stopped another war.
stopped another war. Was it Vietnam and
Cambodia.
Cambodia?
Yeah.
He's just such a good president, man. Come on.
How did he not get the peace deal?
I've no idea.
Nobody's ever stopped as many wars in history. In fact, there hasn't even been that many wars.
He's like a walking, talking saint. We're so lucky to have him. So supposedly he has done and signed some deals while he's in Malaysia. So he's done a deal with Vietnam, Malaysia, Thailand, Cambodia. Thinks there's a deal coming with Brazil. Worried about South Korea. Still deadlocked in a deal with South Korea. He's now left Malaysia. He's heading to Japan today to talk to the new PM over there. And of course, no doubt, we'll be celebrating the fact that Nikkei is through 50,000.
Good stuff, right? Front page of the Financial Times. Again, it's a bit of a slow morning. You've got Trump having helped Argentina's Milei through to win the elections there. And then underneath, a bit on asylum hotels. How did that guy get released into the community?
Oh, crazy, right? Completely crazy.
I mean, what have we got wrong? That's an episode of Line of Duty, isn't it?
Yeah. Oh, speaking of, I started the Bomb Squad one last night. Started
Trigger Point.
Trigger Point. Now
So did I.
That is a show. We got through 2 episodes before.
Oh, did you?
Before
So
we went to sleep on the sofa. Me and the wife.
I came to the end of the first one and I thought, oh, no. I'm going to be old school and I'm only going to watch 1 episode every Sunday night.
Okay.
So stuck to that.
Good for you. I couldn't possibly get there.
This is a good one.
I've got the pre-market indications come through. So whilst you're looking at that.
JP Morgan has offered its staff AI chatbot to help write its performance reviews. If anybody has to go through these performance reviews, we know it's the
Did you see
the best use of your time.
Did you see the picture of the JP Morgan new trading floor in New York?
Yeah.
Oh my goodness. I've got to try and find this picture for
Talking
you.
about battery hens.
Oh jeez, yeah. Hang on a sec, JP Morgan.
So that story. Look, will you use a chatbot to help write your performance review?
Well, no. I mean, to try and write my performance review or to performance review other people? Because I think that's an interesting way to do it. No, look, you're going to end up in a scenario where no one can talk to each other just because everyone's going to be distributing slop all over the place. Right, do you want to pull my screen up on here? That's what it's called. It's called AI slop.
This is like the Bloomberg articles on tariffs.
Yes, it's not the best screenshot, but yeah, look at that. I mean, could you imagine working there? Just 4 screens a piece. So you've got absolutely no vertical vision. You can't see anyone in front of you or behind you. All you can see is just rows and rows and rows.
I mean, that is a little bit like what our trade floor was like. So you couldn't see the people opposite you unless you both stood up. And it's the weirdest thing because you're standing up and then this hot head just pops up and you start trading. But what we didn't have was 25 rows of them.
And what you can't see is how long these things are. Like, I bet they're like 50 desks long. That's too scary, that is. That's too much.
Yeah.
That's too much. Right, I've got some opening calls. We've got GSK being called up, one on that, on those drug rights that they've acquired.
Good, because it had a weekday on Friday, didn't it? Unexpected, do you remember?
I didn't see it.
There was a drug approval and it opened down 1.5%, and you said, "Oh, that's weird," because drug approvals normally goes up.
I do remember that now. Yeah. What else have we got? Goodwin being called up in the FTSE 250, strong trading performance. He's trading in the profits in the excess of 71 million, special divi of £5.32. Great Portland, they've sold a building, 1 Newman Street, that's being called up 2%. I'm just trying to see if I can get a Greatland Gold.
Yeah, not too much out. So after the break, we're going to have a look at what's coming up this week in results. So we'll do that just at 8:05 once we see all the open.
GGP being called down 1% on that figures.
I guess that's just on the gold price as well.
Probably, yeah.
Yeah.
Cool. We'll see you in a sec.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, Right, live television, we are experiencing a fire alarm in the studio, just on the open. So let's see if we can get away with 3 minutes before we have to run out, and we'll get the actual open.
Yeah, exactly. We'll try and get the open through, but we can hear it coming around in here in the morning.
We're gonna put on a recorded program of something, right? So we'll keep the stream open, and then hopefully we're back in within 10 to 15 minutes, and we'll get trade of the week. Unless, is Beecham at home? We'll message him now and try and dial him in immediately, and we'll see if we can get Beachy to come and cover for us.
Please leave the building. Live TV, everybody. This is stress testing the modern working way, isn't it?
The worst thing is if this is actual real fire and we're now going to get stuck.
No. This is going to go down in like our. It will be in our memoirs. They're pro. They stayed until the end. They didn't want to leave the building. They're the last men out the ship. Market's on fire. Yeah, very good.
Market's on fire. Yeah, exactly. It's the IG weekend markets that have set the fire alarm off.
Yeah, Elliot's fingers are too a bruise just from the speed of typing away and trying to reprice everything this weekend.
Right, let's just. Do you want to get the things up there?
Yeah. Look, while we're just waiting, we've got 3 minutes till the market open. The one thing
is everyone else out?
Is the earnings this week. This was something that we were going to talk about just after the markets opened, but we cannot leave the show without speaking about Wednesday and Thursday being the biggest days, I think, of the season.
Guys, chart up if we can, please.
Well, there's no one there to press buttons, is there?
Have they run out already?
They're all out already.
Shall we just leave that on for everybody? Or should we leave on 2 empty seats? That'd be quite funny.
Should we change the lighting as well? Can you change it to like red in the background? Look, so we've got Wednesday is clearly a monster day. Meta, Microsoft, Alphabet after the close, followed shortly by Amazon and Apple on Thursday.
You carry on, look.
I'll just run the show. Okay, cool. Let's not, when we're looking at these results, we're going to be looking at, I think, when it comes down to the big tech, everyone's going to be keeping an eye on that. We've, of course, got a Fed meeting as well later this week. But don't sleep on Boeing, because Boeing's been paraded around the city as part of all these trade deals everywhere. What else are we looking at in here? HSBC tomorrow, of course, here in the UK.
That's why they put that news out ahead of
the results tomorrow.
Yeah, nice.
Right, we're 2 minutes till the opening bell. God, this is really quite distracting, isn't it?
Now we're only 1 minute. Wait. Phil, if you smell smoke, then let us know.
Yeah. We know the fire exit. We're getting pushed out. Okay. Are we going to get it to the open? What do we need to? What are the big stories? In fact, let's look at HSBC. Has HSBC moved lower on that story, indicating down 1.5%. 989 is the uncross.
That makes sense, doesn't it?
GSK, of course, had some stories, up 0.9. What I want to look at, though, is the luxury goods, because we did think both of those are going to move. So Burberry's indicating up 1.6. LVMH in France indicating up a whole 1% in line with the market. What else have we got?
Well, we're almost there. Right, do you get the bell ready for ringing?
You open the door. Right, you got your coat on. Or is this your fire blanket? Right, 12 seconds.
Right.
12 seconds, we've got to go.
Immediately by the nearest exit.
Okay, are we ready?
Use the lift.
5, 4, 3, 2, 1. Okay. The market is open. Right.
Okay.
Everybody have a safe.
Let's put up my screen.
Have a good market. And we'll hopefully see you. Well, hopefully see you again.
Please.
If not, it's been a blast. Right, we'll see you in a bit.
Please leave the building immediately by the nearest exit. Do not use the lift.
Oh, of course, it's a late opening on.
So stay plugged in.
One of those mornings when the London Stock Exchange also clearly has a fire alarm and everything's not opening, or I've lost Wi-Fi.
Please leave the building immediately by the nearest exit. Do not use the lift. Attention, please.
Yeah, they switched my Wi-Fi off as well. Great.
Please leave the building immediately. Please leave the building.
Excellent. Welcome back, everybody. It's Julian Wheeler here with me to discuss all things, well, that have been in the news for the last couple of weeks because we've got plenty to talk about.
We got a lot of talk. Yeah. So last time I was on, it was just the day before, and I said nothing's happening, nothing's untoward.
Yeah. What could possibly go wrong?
What could possibly go wrong? And I go back to my desk, and about lunchtime that day, this is Wednesday, 2 weeks ago, Jefferies, the investment bank, puts out this announcement that the First Brands bankruptcy that's had already had a little bit of publicity, but not very much.
Yes, but it kind of went by without us really focusing.
I mean, companies go bust. This is part of the capital cycle.
Yeah.
But what Jeffrey said was, we've got $714 million exposure in outstanding loans. And you go, right? And then you find out the fund in which is invested, that's 24% of their assets. So people went, Now, Morgan Stanley came out immediately and said, don't worry, loss will be manageable, no problem, no problem. Stock didn't really react. That's what happened later in the day. Later in the day, we suddenly found at lunchtime, BlackRock said, we'd like our money out of the fund.
Oh, I didn't know that. Right, let's get the chart up then, guys. So there's Jefferies over the last, that goes back to the
earnings.
7th of October there.
Okay, so that's when we had the dislocation, right? And that was the news that it wasn't so much they were making a loss, but if the Titanic's hit the iceberg, you want first lifeboat. When there's a run on the bank, you want to be at the front of the queue.
Right.
Now, I'm not saying there's a run on the bank here,
No.
but it was the fact that you get a brokerage say, no, don't worry, manageable, but the actual investors say, we'd like out. And the following day, Morgan Stanley Asset Management said, we'd like our money out as well. So suddenly, there was a case.
See, that gets smelly, doesn't it? The fact that Morgan Stanley are saying, fine, by the way, we do have exposure to this.
Yeah, exactly. So what you suddenly realized was that, then it was followed up the following week. Jamie Dimon, CEO of JP Morgan, on his call, he did the old, well, there's always more than one cockroach in the kitchen sort of story.
That's the famous quote of last week, isn't it?
Yeah, that's right.
Yeah.
To which one of the private equity CEOs came back and said, well, I don't know what he's talking about. We're absolutely fine. Maybe he's saying within JP Morgan, there are plenty of cockroaches, dig back. So you've got this very much public versus private trade-off. And they are, after all, competitors. And I think, the market is the ultimate arbiter. If you look at the last 12 months and say Apollo, who are the most exposed to private credit, if you look at the chart of Apollo and say Blackstone, the two biggest, and you compare those to JP Morgan and say Goldman Sachs,
very different story, isn't it?
It is plus 40% to one lot, minus 10 for the other. So the market's saying private equity, there's either a problem or the good times are over, or at least, it's not going to be as good as it was.
Yeah.
our government wants us now all to put money in our pensions into private equity. Why not 15 years ago when this was all good?
Yeah.
We're all going to be piled into private equity now. No thanks. I'd have liked to have been in private equity when it had the advantage. Because what's going to happen now is that we're going to roll back the regulations on the Wall Street banks. You're going to see the regulations rolled back and lending standards will be loosened. Because basically, and now coming on to the banks, you've seen that these banks, they're normally their own worst enemies, and they, if they, can find something to trip over, they will find it.
Yeah, they try their hardest.
Yeah, they try their hardest, but they have been prevented since 2008.
Yeah.
The regulations that were put in the wave of the bailout and TARP was so onerous. That's what was the growth of private credit. It stepped in because the banks couldn't lend.
Right. Okay.
And now that's sort of unfair. And from JP Morgan downwards, they've clearly led a charge. And you're going to see, I'm pretty sure that's going to come out probably by the end of the year or early next, there will be far looser lending standards. Tier 1 capital requirements will come down. The whole Basel II, Basel III, I don't know what we're up to now, will be repealed or rolled back, certainly. That's what they're going to do. I'm sure about it. And that's why you're seeing the underperformance of private credit.
Well, I would imagine Zion's Bank could probably do with a little less regulation because, that was one of the victims of last week, I guess.
Well, you see, what Zion's, this is very interesting. So Zion's reported last night, and having gone to the market last week and said, we have a 50 million, not first branch, something else. We've sort of looked through our book and suddenly, there's a 50 million bad loss we think may be fraud. And you sort of wonder, well, why did they say it last week? How long has this been known about?
Yeah.
Or how long has this been? The coincidence seems too much. However, when Zion's reported last night, their credit losses were totally manageable within the realms of what you'd expect. So the stock, having gone up again, went up again after hours. So, it's exactly the thing. It's not the banks.
Part of the regulations, though, isn't it? Because if these things aren't disclosed immediately, the CEO risks going to jail.
That's right.
So there's no way that they're...
The banks are not going to be, and the market sort of aggressively sold the banks down on this sort of news yesterday. But they're fighting the last war. This would have been the right thing to do 17 years ago.
Yeah.
But not now. So I think the banks are okay.
Okay. And certainly the regionals have recovered somewhat.
Yeah, there's going to be a little bit of, show me the money, as it were. I want to see it. But Zion's results last night, slightly wonder why they bothered to make that disclosure. So I can't answer that one. But why they made a big point of making a disclosure, them and one called Western Alliance Bank. We'll see what they say. But as I say, no, more likely holding the parcel when the bomb goes off is going to be insurance.
When the bomb goes off,
it is a parcel.
Metaphors
well,
there.
I have lots of them, but the old pass the parcel, and you don't want to be holding it.
Yeah.
And normally it's good old pension fund insurer who's at the end of this line and who says, "Oh yes, I have this, do I?" Back to Jefferies. Their role in all this is the one that's still open to question.
And so Rich Handler spends a lot of time on social media, right? So as the CEO of a bank, should you be commenting on every Instagram post, from these overhead on Wall Street and things like that? Or should you be making sure that one of your funds hasn't got 25% exposure?
I would say so. At what point is, let's leave aside that anything untoward has happened. But on a risk management basis, if we had a fund within Shard that had 25% exposure to one credit name, we do have a credit fund. Shard Credit Partners we do have. So I'm familiar with private credit because we have one, and it has absolute, 10% is a maximum, and that's a sort of standard rule.
Yeah,
I think across the industry. So to find this one has 25%, and then you find that they're also arranging the loans. It's I don't know what's the term, shabby. Maybe. Anyway, we'll see. So unlike Zion's Bank, which has now got its entire loss back, Jefferies is still trading below the point at which this revelation was made. So we'll see.
Yeah. I noticed BNP got absolutely smashed yesterday. Was that something to do because we know that, their total exposure as a bank, not necessarily to this loan book, but they've got a big balance sheet, don't they?
There's always, every cycle normally brings down one financial institution, at least. Credit Suisse was the last one.
God bless its soul.
There we go. Is it BNP? I don't know. I haven't looked at that. Can't comment. But that, again, what's the market telling you? Market didn't like that.
Yeah.
Didn't like that at all. But even I saw Vietnam. The entire Vietnam stock market dropped over 5% yesterday.
Right.
They said because of credit issues.
Okay.
So we know that when there's easy, cheap money and it's a happy game, it encourages risk-taking.
That's it. And then you have very aggressive rate increases. They stay higher for longer than people think they're going to. And bit by bit, that eats away at these institutions and the credit worthiness.
Well, the credit, they've all been, and then what happens is that more money and more money comes in, right? So they've raised more and more of these funds. So what do you do with this money? You've got to deploy it,
You're forced
right?
to.
I mean, if I give you something, it's not to, remember the parable, Jesus of the servant who just went and dug a hole and put his in the ground and said, well, I didn't know how to do it. He said, thou wicked and faithless servant, give it to the man who made most. Very capitalist, Jesus, back in the
He was.
he was.
Spent 30% of his time talking about finance.
I know he did, you see. So the point is that if you get money, you've got to deploy it, right? You earn fees on it when you deploy it. That's the first thing.
Yeah.
So that slightly pushes you to do something. The first brands thing, if there are more like that, we really do have a problem, because that's where they're saying, look, they've made loans and they use the collateral of invoices to then go and get another loan. So they're double and triple counting.
So in invoice financing, the first time I heard about this was, I think, 2017 or 18. And my friend was offered a job for a US firm that was trying to expand in Europe. The returns were just too good to be true.
Well, there you go.
Absolutely. We were like, how do we invest? But there was a minimum, I think, 250,000 it was to invest in this fund.
If they're too good to be true, they are.
Sooner or later.
Well, this is Ponzi 101. You make something attractive to bring in another, and the second person in pays the first, the third pays the second, and so on. This game is as old as finance.
And accounting scandals, fraud, loan book problems, that is late cycle, isn't it?
Always, always. It's when you've had good times, you've made money, and now you go, what do I do next?
Yeah.
Now, what a lot of American companies are doing, which is why the American market continues to go up and why I keep saying you won't have this crash, is most American companies make money and they just buy back their stock.
Yeah.
I mean, they keep retiring across the market about $1 trillion a year. Well, that's a pretty good buyer in the market.
Yeah.
So that with retail, who says, buy the dip, buy the dip, buy the dip. I keep saying this is why the market doesn't go down.
Yeah. Right, we're going into results season.
Yes.
I would imagine, I can't imagine anything there putting the market down. We'll probably see tech go higher yet again. But what are you focused on for earnings?
Well, we talked about Netflix a couple of weeks ago. They're tonight.
Yeah.
They'll be good. They should be good. They should be good. But it's not so much about the results. It's about what they're showing. They'll talk about K-pop Demon Hunters.
Yes, of course.
Well, Funko's been a disaster for now. There are various reasons. I know. I have to own up to the bad one at the moment.
Well, but we looked at it, wasn't it? And it's because it's not even coming out.
It's not coming out this side of Christmas, and that's the problem.
Oh, is it now this side of Christmas?
Yes, and that's why the stock's gone back down.
All right, okay.
But we still think with the stock here at $3, it's trading as if it's going bust.
Mm-hmm.
And I don't think it will go bust because I think they will not allow it to go bust. I think Netflix won't buy it, but they've got a Netflix man in there. They do not want this thing to go down.
So that's something to watch on tonight's call. But what about numbers coming up in the next week or two?
Right. Well, we've got Tesla this week. Can't comment on that. Intel will be more interesting on Thursday.
A real stock.
Now, I've talked about Intel before with you a few months ago. The US government's invested. The stock has moved massively.
Yeah.
It's 50% up since the US government put its money in. So we have to, and they're not going to have spectacular earnings. Right?
No, nothing's changed.
I would be, personally, I'd be taking profits on that.
Yeah.
Because the risk reward at 38, if you were in the low 20s or something, right, you've made a huge move. So it'll be about what we have, what's progress, what's coming. And I can't see that they can do enough to take the stock up versus what might put the stock back down. Now, if it goes back down to, say, low 30s.
Yeah, 32s.
Yeah, something like that, a big buyer. For long term, Intel's back in the game.
Yeah.
It really is back in the game. And the real kicker could come. This is one of my worries. I've got 3 worries in the market. One of them is obviously the China and Trump trade deal, which goes backwards and forwards, and but it's always there as an overhang.
Are we getting a resolution this week?
Well, we're supposed to, but I mean, do we? I've no idea. I mean, your guess is as good as mine. But here's what's the worry. It's a plus for Intel and a negative for TSMC. Trump said that part of the thing they'd be discussing would be Taiwan sovereignty.
Wow.
He said that to reporters. I don't know why the market didn't pick up on this. Yesterday, when he was talking to the Daily Reporter thing, and he said, yeah, I don't like what they're doing with fentanyl, don't like what they're doing with rare earth, they're playing the rare earth game with us. But off that soundbite, he also said, yeah, I'm sure the subject of Taiwan will come up.
Right, okay.
Well, if he says anything that is negative for Taiwan, that's not good.
Yeah.
That's not very good. Just for the market perception, I'm just saying. But anything that's negative for Taiwan is probably positive for Intel.
Yeah, but there's nothing that can be said there. There's no way that Xi and Trump could ever have a discussion that has a solution on that.
No, what the Chinese want is they want the American wording of their recognition of Taiwan changed. It's something like, at the moment, they recognize the fact that they are an independent state, or they don't wish to. There's a certain wording that's currently used under US standard policy, and he wants to change it to something that's, shall we say, more negative.
Right, okay. And less in
favor.
Defend them.
Yes. Yeah. And if the market decided that that was for real, there's going to be a problem.
Yeah.
So, other earnings. Sorry, I want to talk about one that's
there's Alcoa numbers tomorrow night. You've got some thoughts on Alcoa, but not necessarily
not the earnings.
For the earnings, yeah.
No. Okay. Alcoa is my new sort of stealth AI play.
Oh, right. Okay.
Okay. Because, look, metals have been up everywhere.
Yeah.
All the precious metals are through the roof. Alcoa is the old, original, was a member of the Dow Jones, aluminium. Aluminium's been in a bad place. 2 main drivers of aluminium demand, auto, so cars and planes. Right. Now, as you know, Boeing haven't been making as many planes as they should. So that's not very good. Mm-hmm. Airbus are maxed out, so you can't get any growth there. And cars have been terrible. I mean, look at the German car companies. They've been absolutely shocking.
Yeah.
So the demand picture isn't great. And Alcoa's numbers, they're only going to make probably a couple of cents earnings tomorrow. Okay, so we really aren't in this for the earnings. No. What we're in it for is an asset play.
Okay.
Here's what happens. Alcoa has built up, obviously, over time, its plants. It's been in business for, since aluminium started. Yeah. Right? And back in the 1940s, 50s, 60s was when they were really expanding. They built plants all over the place.
Busy then.
They're busy. So what they've now done is they've decommissioned quite a lot of sites.
Okay.
One of which is in Australia.
Right.
Major one. And if you can, I don't know if you can show me. There we go.
Almost as if we planned.
Almost as if we by magic. Right. You're looking at Melbourne there. So Melbourne's in the top right-hand corner, as you see. There you go. But I don't want you to look at Melbourne. I want you to now come down the coast and look at Geelong. There we go. Now, Geelong, you see, is basically a suburb of Melbourne. Nice coastal bit. Now then, the bit that matters is that little horn bit sticking up right in the middle there, called Point Henry. Okay. There we go. And we zoom in there. Boom. Now, how about that for a little beach frontage real estate?
Beautiful.
Lovely. But there are no houses. That is Alcoa's aluminium smelter.
Wow.
Or was. Or was.
It's just been decommissioned.
Not just, because it takes time. It was decommissioned in 2014.
Okay.
Took 10 years to clean it up, remediation. Last summer, they asked for proposals for what to do with that.
That's a lot of land.
I'll tell you how much it is. Do you want to think in hectares or acres?
Go on, you tell me in acres.
Acres, 1,300 acres.
Right, okay.
1,300 acres. Look at that. Look at it on the left there. That's Geelong. There's the city.
Yeah.
How about, would you like to live on the nice little bit out in the bay there? Okay,
Wow.
come around there. Right, 1,300 acres of that. Now, I've done some work with people who are developers and stuff. What's that worth? I'll give you the nutshell. About 500 million.
Okay.
We reckon that's worth $500 million if they sell it. And they've been asking for proposals. Now, when you go tap, 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 Alcoa's market cap
That's exactly what I was tapping.
is 10 billion.
It's 10 billion,
billion.
5%.
So that's 5% of the company right there. Okay, right there. Now, that's just the start. Okay, that's just the start. Now I'll be quicker. I'll speed up. Right, they have a place called Messina in New York. That's an existing aluminium plant.
Okay.
But they don't use all of it. Who do you think they've had in there for the last 7 years? A Bitcoin miner.
Of course they have, right?
Why would they have a Bitcoin miner at an aluminium plant? Because aluminium is the most power-intensive industrial process known to man.
Yeah.
When that Geelong plant you just saw there was operational, it was drawing 25% of the entire state of Victoria's electricity.
Wow.
Okay.
Okay.
For that aluminium plant.
Yeah.
Aluminium is basically solid electricity. Think of it like that. That's what it is, right? So, what does that mean? If you're Alcoa, every plant you have has got to have a massive power supply.
Right
See
beside
where
it.
this is going?
Yeah.
So if you run that, you have been in business for years. You've got long-term power contracts with the utility supplier, with the grid. You understand that when the grid was built, it has to supply you first because you're the base load. When utilities talk about having a base load to sell to customers, they mean to Alcoa.
Right.
Or someone like them.
Yeah.
Massive industrial plant that's on 24 hours a day, we know guarantees us our take of our supply. There's our biggest, best customer.
Yeah.
So guess what? At Messina in New York, they've just done a new 10-year power deal. 10 years. They've signed that this summer. So 10 years of power guaranteed to them. Now, where are we going with this? That Bitcoin miner's lease comes up for renewal. Okay, Mr. Bitcoin miner, do you want to stay? Oh, do you know what? You're going to have to pay a bit more because we've got Oracle, Microsoft, Google,
Banging the door down.
Meta, Amazon saying, oh, could we put a data center just on the side of your aluminium plant? Oh, we could use your power. Oh, and it's already attached to the grid. So we won't have to wait for all that permitting from everywhere
Yeah.
else. Alcoa could be the power bottleneck unlocker
Yeah.
for the data center industry, except it's on 9 times earnings.
And what would that do to the aluminium price?
Well, the aluminium price is already, now I get back to the fundamentals of aluminium.
Yeah.
We've also had a little benefit. There was a fire in somewhere called Oswego, I think. Oswego.
Welcome back, everybody. So we've upgraded Luke Moore. As you can see,
We are investigating an alarm.
could be my best friend in a minute because there's another alarm going off now. So goodness only knows what is going on this morning. Right, let's have a look at the moves then. What have we got? GSK is the best performer, up 1.4%. Scottish Mortgage Investment Trust up 1.2%. Barclays up 1.1%.
It may be necessary.
And Rolls-Royce up at £11.30. What about on the negative side? Ooh, Ocado not doing well. Centrica not going down. Diageo, there it is. The big beneficiary from tariffs,
It may be
as prompted by Bloomberg this morning. Those AI articles are just so rubbish. Diageo down 1.7%. Persimmon down 1%. Weatherspoons down 1%. HSBC only down 90 basis points on the back of that 1.5 billion, 1.1 billion
further announcement.
provision it's having to take on the back of Bernie Madoff.
Attention.
In Europe, let's really quickly go through Europe before we give you trade of the week. The best performer is Porsche, then ASML,
Necessary to evacuate.
Siemens, Volkswagen.
Please await further announcement.
On the negative side, we have LVMH, another one, big beneficiary of the tariff deal, according to Bloomberg, and Kerching as well, down 80 basis points. And Deutsche Bank, really quick look at
Please await
the commodities. Just get from producer Phil whether do we have BT up and running?
Attention, please. Attention, please.
Okay, perfect. Right, currencies 133.20. You've got the yen approaching 153. So that huge day that we had in Japan crossing 50,000, you are seeing the yen stay around the same level as it was on Friday. Is Luke still in the queue at Greg's? No comment, Shrimp Fred. And we did, producer Phil was good enough to buy us a coffee there. Full credit to him there. And then here he is.
Attention.
I haven't got a mic on, but safe to say I didn't burn down. I am still here, and I'm not in Greg's.
Yeah, do you see that?
I'm not in Greg's. I am back.
Absolutely brilliant. And then just quickly on commodities. So oil down 20 basis points. Silver down 1.4 now. Silver has lost the 5 handle. Copper up $5.21. And right, I think that's us. They're still trying to tell us. Yeah.
How do you actually open an LVMH? You can't. I'm not mic'd up.
So this isn't a setup. He genuinely just asked how are Diageo and LVMH. Diageo down 1.7%. And LVMH down 1.2%. Are we settled that Bloomberg AI is bullshit? Right, so Beachy's going to come to us with Trade of the Week, and hopefully Chris Beecham will not be having a fire alarm going on in his house. By the time we get Garth McKenzie in, we will have ripped this bloody alarm out of the roof, and we'll be back with you. But yeah, this will be live television. Chris Beecham coming to you live now with Trade of the Week. Thank you to Luke and his fire extinguisher for saving us. Fireman Luke, yeah, helped us get out the building alive.
I think it's another one. There's a few of them. I thought you guys will know. There you go. MP Material, he's one of them. There you go.
So there we go. It's gone from 23 to 82. Now, they have...
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Good morning and welcome to Trade of the Week for Monday, the 27th of October. I'm in a house with no fire alarm, which is always good. unlike the rest of the studio. So let's look at what we've got coming up this week in a second, but we'll go back last week to Trade of the Week for Monday, the 20th of October. This was long DAX. Now, this had a good start to the week, but as we stand here with US indices and Japanese indices and UK indices hitting record highs, it's kind of the DAX is the one that's a bit left out. So apologies, I picked an index. I picked the wrong one last week. We've had one that's gone up. I think it's up on the week so far, and it's certainly nowhere near the stop, but it isn't showing the same soar away performance that we'd seen from the likes of US and Japanese markets. So maybe 5 out of 10 for this trade of the week. I think from last week, it's still holding on. I think if you've got a global market rally, there's an expectation that the DAX will at some point join in. Maybe there's some uncertainty coming through with the ECB meeting this week. The fact it's not got any big tech stocks in it, it's not directly affected by US-China trade talks, perhaps. Anyway, whatever reason, it's found a bit of resistance around 24,400, but still well up on where we were at the start of the week. And obviously our stop is all the way down here, so nothing to worry about at the moment. We could leave this one to run. You've got rising stochastics, which suggests momentum will give it a shove to the upside at some point. You might be poised to see a bullish MACD crossover here, which would reinforce the bullish view and still give us perhaps room for this one to push on back towards these record highs, which, lest we forget, was only just about 3 weeks ago. So nothing too spectacular from the DAX this week. And as you can see, a little bit of a weak start to early trading for the index. So let's go to this week's trade. This is Monday, the 27th of October. With some trepidation, because we might get run over by this one, but we're going to go short crude oil. This is an interesting one because sell the rally has been the name of the game for weeks in crude oil, had I but done it myself. Since the end of July, every time you've had a decent pop in crude oil, it's given way to the downside. So in the spirit of doing what the trend tells you to do, we are going to go short because you've had this bounce over the course of the last week from 56 to 62. Decent bounce in crude oil, but as you can see, it started to run out of steam or oil, depending on your view. So the fact that we did try and get back above this blue line, which is the 50-day moving average, we did try and get back above the 62 level, and neither of those succeeded. So this is our bearish view given form, if you like, because the last time we did this in early October, a short-term bounce again hit the wall at 62 and came off. So the expectation is, I shouldn't say hope because hope isn't a trading strategy, but the expectation is that 62 will continue to hold as resistance, and we have a potential renewal of the move to the downside. This downward trend, as you can see, the moving average is pointing lower, the lower highs and lower lows coming through. Excuse my voice. That we have a reversal on our hands, and that we should get maybe confirmed by stochastics in due course, but you've got a second down day here in early trading. So at least our bearish view is sort of maintained in place. So we're looking to go short US crude oil with a target perhaps down as far as these lows from last week, down at 56, and a stop, we'll put it at $62.50, $62.50 a barrel on US crude oil. So that's that trade of the week. And now let's roll on happily to whatever it's called. I forgot what it's called. There we go. Used to call it charting the markets, but I don't call it that anymore. Technically speaking, thank you, Gallery. Sorry, it's a Monday morning. I got back late last night. So we had one request so far. Do remember to get your request in. I'll keep an eye on the chat. The Gallery will keep feeding them to me as well. Gold first, of course. What more would you want to talk about on a Monday morning than potential continuation of losses in gold? Yes, so it was a fun week. It's obviously we had the end of the previous week. If you think back, we had that reversal, then it seemed to recover. All seemed good last Monday, and then the sellers came back in with a vengeance. So continues to take a bit of a bite out of this uptrend, but the uptrend is still there. It will have felt horrible if you had been racing in to buy with all the mania that happened over the last 2 weeks. We are back where we were on gold last seen 2 weeks ago. So this is the way, funny how markets work. When gold first touched $4,060 on the way up 2 weeks ago, it was a cause for celebration. It's doing it today after coming off by some $300. It's a cause for concern. So perhaps you've got a bit more downside to come, because as we're saying on the way up, I think we said this several times, at some point, this wide gap between gold, between the price and the first moving average we've got in our chart, the 50-day moving average, will matter. But you don't know when. It turned out that it was about a week ago. and you've had this reversal, and now you've got a potential continuation of this loss. It looks like in early trading, of course, the sellers are still firmly in charge. Possible support on Wednesday's low at just above 4,000. Obviously, the rule of big round numbers applies to gold as it does to indices and indeed every other market. But at the moment, it looks like the sellers have still just about got the upper hand, but it has been tricky. If you looked at Wednesday, Thursday, and Friday of last week, there was plenty of buying coming in above 4,000 to try and hold it, but it's not had the strength to push it back again. So still in pullback mode within an uptrend. So the playbook here might well be wait for the sign that it's bottom, because remember, prices go down, they go up, but they also go sideways. And for something to go back up again, it has to stop going down. It sounds like a truism, but it's so often the case that people jump in too early in the fear that they will miss a continuation of this rally. You will get the dip, it looks like. It may well be more pain to come. Probably need to see a few more news articles that say, is this the end for the gold rally? And then it might start to rally again. So one to keep on your list. If you want to be long gold, it certainly really isn't seeing the price action that would suggest that a low is in for the time being. So that's what we have on gold. Thank you for that, Andrew. Heckler, what's this one? This is where we just pick out random names and we have to go. Heckler Mining. So this is probably going to be what? Teeny tiny one. Maybe not too bad. Extended hours. So no, maybe I do it disservice. Again, it's almost like gold, isn't it? It's sideways consolidation for months and months and months and months. Is it gold miner? Monkey man? That's a question to ask. Ruthless sideways movement for ages and ages, and it's finally broken to the upside. Absolutely spectacular rally. And then, as with gold, at some point the price wakes up and discovers it's running in midair and has to come back again. You've still got the same kind of price action here that you had last week on gold. The lows of Wednesday got bought. They tried to carry that over into Thursday and Friday, and now it's off the downside again in early trading this morning. So maybe a little bit more weakness coming through here. I think if you were a bull on this, you'd want to see it perhaps go as far as the 50-day moving average to really sort of test that as possible support to see whether that shapes up. And if not, the next one down is this 18th of September low at about $10.60. That's what we're watching to see if that holds in the event that we have obviously quite a bit of downside from there if we start to move in that direction. But again, uptrend, you've not had a pullback in this for weeks and weeks. So one is overdue. You do not know when these things arrive. You can simply say that you probably should expect one. And that's when you start looking at it again for a possible move to the upside. Maturin wants to talk about Saga and a bullish flag. No, I'm not the person to talk about bullish flags. You'll want Axel on that one, but I will do my best. Yeah, Saga, excellent rally. Again, there's so many charts look like this at the moment. It just continues to rally all the way through. It really didn't have much of an impact really around trade wars. There was your safe haven from trade wars had you but known it at the time. Back again and then just rallying and rallying. And you can see how it rallies, drifts down, rallies, comes back down again. It's done a proper old rally, this one. Drifted back again. It's still a little bit far away in terms of the moving averages, but maybe you don't always get a big pullback, a really, really big one that you can definitively say, oh yeah, that's a nice high low. Maybe it just consolidates a little bit. This would be in keeping with what we saw in July and then earlier in the year as well. It seems like for the time being, 260 is your line in the sand. So you could say, oh, well, we've got a recovery here from the end of last week. You've got stochastics moving higher. Where's your stop going? Probably below that low from the 17th of October, just to give it some room. But it's still a very, very decent trend. Yes, is that a record high or is that? I don't know. No, definitely not. Of course, I remember when this listed, of course, very different world. Doing really well, multi-year high, but not multi-month, not multi-decade high. But you can see obviously 300 starting to loom as a possible target if this does continue, because that was a key area back in 2022. We'll watch how that one plays out. Pensana, was going to do something driven by news flow rather than technicals. Gosh, let's have a look at this. Gosh, it's uptrend day in Chartland, isn't it, really? I forgot what this one's called again. Pensana, there we go. So pull back towards 180. There's your 50-day moving average touch, not seen since early August. it's very much more of the same this morning, isn't it? The mania around rare earths got to a peak on the 17th. Here is your pullback starting to recover. So that looks a bit more conclusive in terms of an uptrend. And again, here was this massive distance from 180p down to the 50-day moving average, in the same way that at some point it decided to matter in July, and you had a gentle pullback. This was not a gentle pullback. It's taken place very, very quickly and very, very dramatically, but it has pulled back, and that is now potentially forming the higher low that you'd want to see in an uptrend. If that's what we see with gold, this is the kind of thing you'd like to see, that it was going down. It's now stopped going down. This isn't MSCI level analysis, I'm sorry, but it's my view that the price has to stop going down before it can go back up again. It looks like it's moved from the going down phase to the going sideways phase. And now we wait to see if it can break back above 140 and give us a bit of a push to the upside. This was a key level back in 15th of September, so maybe that will be a bit of a stumbling block in the short term. But if it can close back above there, you could probably be fairly optimistic, shall I say, that has found a low and that we are pushing higher once again. So that's Pensana for you. And then AMD, I think this is the last request we've got so far, so keep the last ones coming in. We should talk about, it's either rare earths or tech stocks these days, isn't it really, or chip stocks. It's all in the bag. AMD continues to be a stellar recovery after what was a miserable start to the year and miserable end to 2024. It's come storming back. There's your recovery for AMD. Tough, goes through these long winters and then it recovers. That's very interesting in terms of the price. This is what I mean about the price being so overextended. At some point it has to care, but we don't know when. We thought maybe that would be the case earlier in the month, and it's revived. It must have earnings coming out. I should know, but off the top of my head, I don't know when the next one is. Does it say in tip ranks? No, it doesn't. There we go. But again, uptrend. The problem with that strategy, of course, buying dips, is it doesn't always work out as elegantly as you'd like, because here it was in July. This could have been the dip. It wasn't, because it dropped down again. And you sort of have false dawns all the way through before you really got the actual low. And even then, it was a bit of a messy battle before it broke to the upside. But really, really strong move here in terms of to new record highs, I think it is, or at least long-term highs. A lot of empty space here. So you might be slightly late in the short term, depending on how news goes, but still very, very positive from, I think, a technical perspective. I think we're not going to do Vodafone. Why would we do Vodafone, Rich McDonald? Let's do SPY quickly, purely on a technical basis. I'm not doing Vodafone. I'll do Vodafone. I should be bearish about it. Is it? Let's not talk about Vodafone. Who cares about Vodafone? US 500 all-time record highs as well. Gap higher. Trade war risk has dropped off the table again. There's your surprise, I think. It's been a quiet, relentless rally, and it shows no sign of stopping. That's not blasé optimism. It's just how things are running at the moment. Earnings season has been going well. I think it's the strongest level of beats in 4 years across the entire S&P 500 so far. So that is still a very positive sign. This appears to be, despite all the noise, an earnings-driven bull market. And that gives the fundamental strength behind the technical move, which, as we say, has continued to record higher highs and higher lows. As we get towards the end of the year, I'm very conscious that it's been a very quiet, very not easy rally, but a very gentle rally. These things don't last forever. And it's often funny how you get the sort of change in mood around the 31st December, 1st of January, that we have a quiet year and a busy year. That's kind of what you might think about contemplating, shall we say, for the year ahead, that it can't always go on this way, but they do go on longer than you think, and that's exactly what we've got here. So fresh recovery here, very, very strong sign, and no point standing in the way of this bull trend. The advanced decline line, the sort of granddaddy of all breadth indicators, new record high there as well. There's no sign of any sort of weakness below the surface, it has to be said. Vodafone, don't know what it does. It's some kind of telecom stock, really quite boring. I think you buy it purely for the dividend. Sideways, not a record high for according to this chart, but doing very, very well. Pains me to say it, of course, but it is. A lot of support came through around this 84 level, and that's the interesting thing, that you had the strong rally, and it was a frustrating one because you thought it bottomed in late September, thought it bottomed again the early October, and then it finally decided to break higher. And so the uptrend remains in place there. So your first real pullback after a long run from the middle of June puts it on course for the test of these recent highs. So a very, very solid performance from Vodafone, if I do say so myself. Is that everything? Have we done everything? I think we've done everything. T and VZ, what's that one? Is that a company? I don't know. Yeah, I think we'll leave that one. Apologies. Put that one in for next week. And then we go on to a fire alarm delayed guess the chart. But thank you very much, everybody. And you'll be relieved to hear, I'm sure, that Axel will be back next week.
Uh-huh. 7:30, baby. And the market's looking mighty fine. Let's shake that chart. Well, the kettle's boiling, screens are glowing bright. Rich and Angel smiling, starting off the night. Trading all together, dancing through the news. IG's got the rhythm, baby, nothing to lose. Guess the chart. Come on, guess the chart. Shake that part. Oh, we're playing it smart. It's Trade Live with IG, don't you know? We're rocking those numbers, baby. Go, go, go. Phil's in the booth with a wink and a grin. Dom's on the camera, let the show begin. Axel's got a tip, Piers loves tech. Market's on fire, what you expect? Guess the chart. Come on, guess the chart. Play your part. Oh, we're hitting the mark. It's Trade Live with IG, roll that show. We're shaking those tickers, baby. Go, go, go. From Tesco to Barclays, stocks on parade. Shells on the move, watch the prices trade. Charts don't lie, they twist and shout. You know what we're all about. Guess the chart. Come on, guess the chart. Play your part. Yeah, we're tearing apart. It's Trade Live with IG, the way to start. With a beat in your soul and a chart in your heart. Uh-huh. Yeah, yeah. Chart. Play your part. Yeah, we're tearing apart. It's Trade Live with IG, the way to start. With a beat in your soul and a chart in your heart. Uh-huh. Now that's what I call a morning market move, baby. Thank you very much.
What a morning. What a morning. Sorry about all the interruptions, everybody, but we are absolutely back on schedule with no alarms going off. Garth McKenzie, very welcome to the show.
Thanks, Rich. It's good to be back with you. I heard all about the chaos there this morning. Sounds like you guys have had an interesting morning.
It's been fantastic so far. The chart of the day there, well, Julian smashed it. Whenever it came up, I said, "Oh, that chart looks really good," not realizing it was Apple. It's funny, isn't it? The difference between the charts and the fundamentals, and that is what we're going to be talking about today. We've got quite a few things to go through, Garth, don't we? We're going to talk about S&P. We're going to talk about Bitcoin, Netflix, Tesla. Where would you like to start, sir?
Well, I mean, since you mentioned S&P first, why don't we start there at the high level? Look, and we can drill down into some of the stocks that are reporting this week and some technical things that are looking pretty good. So let's start with the S&P. I mean, that's it's well in line with what's been going on there at the office this morning. These markets are on fire. Glad your building's not on fire though. But yeah, I mean, S&P having a big gap up this morning on the back of the China and US trade talks making good progress, and Trump and Xi Jinping due to meet this week Thursday to sign a trade deal by all accounts. So markets are strong this morning, and we've got S&P, having broken out on Friday. It broke out through a big level at 67.50, and that breakout opens, by my measures, a move up to 69.50 as the next measured target. So we're on the way.
Do we have your charts there, Garth, or do you want me to get that one up?
I don't have charts, so I think if you've got them on your side, then
Brilliant.
we can talk about yours.
Let's have a look at that then. So as we can see, as Chris Beecham's just been taking us through, the huge rally that we've had there, it's that's a gap, isn't it? Ever since we had that inflation number on Friday, then it's been powering ahead. It went through that 6750 level. What makes you think 6950 is the next stop on the train line?
Well, if you take the horizontal line through 6750, which was broken on Friday, that also basically is now the neckline of an inverted head and shoulders pattern. If you look there, you can see it's not perfectly formed, it's not classically formed, but you've got a left shoulder that formed in the earlier part of October, then the head where we dipped down sharply down to 6550. That was on the back of the tariff announcement, 2 Fridays ago, I think it was. And then we've recovered that. And all along, as I've been watching that, since that sharp drop, and we've since then been making higher lows. And we've been pushing up against that 6750 level again and again and again. And I often think about it, if you push against a wall and you hammer against a wall over and over and over, eventually you're going to break through it. And that's kind of what this market's been doing up at 6750. It's been pushing through that, or pushing up against that resistance. And it did look inevitably like it was going to resolve to the upside. And that's exactly what happened. And why I get a target of 6950 is if you believe that is an inverse head and shoulders pattern, and the break above 6750 was what validated it, you take the height of the pattern at the head portion,
right,
and project that up. Now that the distance from the bottom of the head to the neckline is 200 points. So if you add 200 points onto 6750, that gives you 6950, and that's basically how I get that measured target from that breakout now.
Okay. And is there any, can you tell from the chart as well what kind of timing that will be?
It's very difficult to work out timing on these sort of things. You can measure price projection targets, but in terms of the amount of time that it takes to get there, that can vary. So I have no idea. I really don't know how long it's going to take to get there. But what I do think is that it feels right now like we've got animal spirits are alive and well, and no doubt shorts are probably being caught on the wrong side here. So you could actually find that it gets there relatively quickly if you continue to see this momentum building and just continuing really as it has been.
Some animals are smarter than others, though, right?
Some animals are smarter than others, but
Because
the thing is,
the
right, in the
quantum, for
market-
example, the quantum animal spirits will infer for us, and they've been slapped right back down 30%.
Yeah, well, this is it, right? Sometimes you don't actually need to be the smartest guy in the room in
Thank
the
God
markets.
for that.
In fact, sometimes that can be to your detriment, actually. I've seen what you're referring to, the quantum things. There's an article on Bloomberg about it this morning. They haven't done very well lately.
And then
if
rare
you've just
earths,
been
exactly
following
the same.
trends-
Rare earths were rare earth stocks were in that animal spirits. You know, I'm coining the phrase animal spirits to be in these headless chickens that were buying the meme stock of rare earths and quantum computing, and they've come right back down to earth. So we've seen some areas of the market where they were definitely in a bubble, and I mean, both of them, MP Materials, rare earths, back down, dropping 30% there as well. So that's encouraging to me. So I can buy into the S&P 500 animal spirits because the idiocy has been wiped out.
Yeah, that makes sense. And I think to your point about these sort of meme type stocks being in bubbles, yes, and you've seen them. You could make the same argument about the gold shares recently as well, actually, where they went absolutely parabolic to the upside. And obviously, we've seen a sharp pullback in a number of the gold shares now. And that's kind of when anything gets too far away from the mean, you get several standard deviations away from the mean. You're in dangerous territory if you're chasing it at that point, and that's usually when you would expect to see a pullback. And as you've said, we've seen it in the rare earth stocks now. We've seen it in the gold share. So yeah, it's some of the froth coming out in those areas of the market that have been very, very hot lately.
Yeah, gold miners down 15%. Wow, that's
and that's come quickly. And it's a typical example of that saying, the bull climbs up the stairs and the bear falls out the window.
I've never heard that one before.
Well, there's many variations of it, Rich. What's the other one? The bull goes up the escalator and the bear goes down the lift. It talks to the point that markets always go down faster than they go up. And I think that's also what makes shorting quite difficult, actually, if you're trying to short something that keeps going up and up. Because often when the pullback comes, it's very rapid, and your window of opportunity to get it right is actually quite narrow. So, I mean, I know many participants who've been trying to short the gold shares on the way up, and they've all been getting squeezed out and squeezed out. And until eventually there's no bears left, and suddenly then the bottom falls out the market and you get this 15% pullback that you're referring to. It's very difficult to try and time those entries on the short side when the market is so strong, because it tends to push to the point of maximum pain.
It's a little bit like when you're sitting on the roulette wheel and it's come up 12 times in a row, black. Surely it's going to come up red soon. So you start doubling up and doubling up and doubling up. And I've seen it go 17 times in a row black before, and see somebody get carried out of the casino by security. But it's the same idea here. You can build into a short when it's going crazy like that. I had some luck in Rigetti, and in gold as well, actually, I guess. But it is easier when something's coming off hard rather than continues to go up, I guess.
Yeah, I mean, often with those sort of things, I would prefer, rather than trying to short into strength and not knowing where the top is, you're essentially top. I would rather wait for evidence that the crack has happened. Mm-hmm. You get a big daily reversal, and then at least you know that you're no longer trying to pick a top while it's just moving higher and higher and higher. You're seeing that there is actually evidence come in that there is selling around, and at least you've got something to work against, and also then a level to put a stop loss in if you're wrong. And that's always so important. I can't ever stress that enough. You've got to always have a stop loss and know where you call it a day if your risk parameters have been broken.
And I guess, that feeds into this idea of the bear falling out the window, because if you're waiting and everybody else is waiting for it to stop going up, and as soon as it turns, then you all want to sell it. Well, that's why it crashes, right?
Well, that's partly why it crashes, but also the other part of that dynamic, what drives it up is buying. But you get to a point where, when particularly towards the end of a very steep rally, where it's not that much Apple buying that's actually taking the price up. It's often short covering that's taking the price up. And once the shorts have all stopped buying, in other words, they've all been squeezed out, suddenly there's no buyers left, right? And that's when the price suddenly, there's a vacuum, an air pocket underneath the price, and it suddenly drops very, very quickly. That's often the dynamic behind what happens there.
It also seems, now that retail have been introduced options trading, and it's really taken off, that seems to be exacerbating these moves as well, because they're all jumping into the buying calls in these stocks like Beyond Meat, and
Yes.
so that's interesting. It's hard to work out exactly where then the desks stand with their delta. So, for example, on the 0 day to expiry, if you have a big buyer of call options, but they get settled at 9 p.m., then they're not getting settled into a position because you don't take the position. So I never quite understand what the driver is as the seller of the option. The desk is hedging its delta on the way up and pushing the market higher.
Well, yeah, it's a good question. I'm just trying to think aloud while we're discussing. If you're the options market maker, right, and you're essentially selling the calls to those retail participants that are buying the call options, the more that they buy, essentially, the more of the underlying stock that you also need to buy to hedge your position. But like you say, if it expires at the end of the day,
who's left holding the baby? That's the one that I can't understand.
Yeah, I'm probably not the right guy to ask because I'm not an options market maker. And I mean, I understand the dynamics and I understand the thinking behind it, and I can understand the where you're coming from, because someone's going to be left holding the bag, right?
Yeah, and it's definitely distorting moves.
Oh no, without a doubt, it's distorting moves. I mean, you've really got a case of the tail wagging the dog in many of these situations now, where you've got small time retail players who are suddenly able to cause these huge moves in share prices or in markets, driven by the fact that they're going out and they're buying options with limited funds and margin, but forcing these options market makers to go into the market and have to buy the stock up.
Yeah.
So when you talk about something like Beyond Meat, I mean, that's a classic example, and that's just the latest iteration of what really started with GameStop back in, what was it, 2022 or 21, I forget.
Yeah.
Where the animal spirits came alive and well there, and essentially the retail army got on board, bought call options, until next week, and forced the price up. And they seem to also do it in these stocks where there's a lot of high short interest already, which is clever on their part, because it means that if there's already a lot of short interest in the stock, well, that means if you're short, you're a guaranteed buyer at some point in the future.
Yeah. Well, certainly one where it looks interesting at the moment in these options, I've actually just sold some puts in Netflix. So post earnings, we've seen a real sell-off, haven't we, Garth?
Yeah, we have. We've seen a big sell-off, and this is interesting because I have a sort of a strategy that I call a 3-day rule, and it's where if there's shock news that comes into a share's price, it causes a big move. Can be up or down, but invariably more so to the downside. You get
let's keep that chart up, please, guys.
Yeah, let's keep the chart up, and but what I'd also like to do is zoom right out. If you can, maybe even go onto a weekly chart and and zoom out far, because I actually want to just bring in the long-term uptrend here. Right, there you go. But I don't think that's a logarithmic chart. That looks like it's a non-log chart. In any case, on the log chart, you can pull in your uptrend from 2023, and it comes in right about where the share price is at the moment. But to go back to what I was talking about with the 3-day rule, essentially you get some sort of a shock news event that comes in and causes the share price to make a massive move. So in the case of Netflix, it was earnings last week and something to do with a tax dispute in Brazil. And you saw the share price down hard on the first day of that announcement. Then you get further selling on the second day, but generally speaking, by the third day, you get some stability coming into the share's price. And that's often when the bad news has pretty much all been digested. Margin calls have been executed, and the weak hands have been shaken out of the stock. And invariably, what I typically then look for is on the fourth day, start to look for some stability to come in. And if you believe that there was an overreaction to the downside on the share's price and that there's likely to be a bounce, invariably that will start to happen on the fourth day, and maybe into the fifth, sixth, seventh day, you can actually capture a bit of a bounce in the share price. And I find that works well, is instead of just trying to buy it because you think, oh, the share's down sharply, rather wait until you can see the evidence that the selling has started to subside, and you know that most of the weak hands have been shaken out, and then you can start doing your bargain hunting if you believe that there is a bargain to be had. And I think Netflix ticks the box here very nicely. When I've actually bought some, I started to buy late on Friday afternoon.
Yeah, same.
And I will probably look to buy some more today if it starts to stabilize. But what I really want to see today is that the price actually starts to trade above Friday's high. Because if it starts to trade above Friday's high, then what that would indicate is that the sellers have pretty much finished selling. The buyers are now starting to take control of the price action. And then you want to be buying, knowing that you've got other buyers around you helping to prop the price up. You're not just trying to pick a bottom and hope for the best. So I think it's interesting. I think Netflix at this point in time looks like it's ticking all the boxes for a potential 3-day rule trade here.
Nice. I'm just having a look to see if we've got the daily options on that one. I don't think we do. No, we don't have daily on Netflix yet, because that will be quite an interesting reversal. Once we see it turn, I'm completely with you on this one. If it's showing up 70, 80 basis points, then that could well be the end of it.
Yeah, well, exactly. And I suspect that probably is the case. I mean, I know it is up a little bit in the after hours trade or in your 24-hour session there. The other point I just wanted to make about this, I'm just looking at it on my chart over here, but I think if I'm not wrong, it's right about the 200-day moving average as well, just a little bit below at the moment. But if it can recover back above the 200-day moving average, that would also bode quite well for a further recovery. And I wouldn't be surprised if you get 5 or 6% upside here in a couple of days, because that's often what happens when these shares overreact to the downside.
The 3-day rule is really fascinating, isn't it? Because obviously the first move is the numbers. So that's what the derivatives market already had priced in. But it's this one here. It's on day 2 when you get the actual real selling. And, that is hedge funds and long funds getting out of their position. And then you've got people try to pick the bottom, and they try to just think, that looks interesting. It's it's cheap, like it's cheap to get into Netflix down here. And then, as you say, we've got that place now where the buyers and the sellers have kind of aligned, and there's no real force, and that those sellers could be coming to an end.
Yeah, well, that's it. And it's important to wait the 3 days. That's the thing. I can't tell you how many times in my career I've been, you see a stock down 10% on day 1 and you think, oh, wow, no, this is cheap. I've definitely got to have a few of these. And then day 2, it's down another 5%. And now you're sort of squealing and thinking, I'm stuck in this long position. I got in too early. The number of times that has happened, and I've learned a lesson over the years, just wait. Just be patient. Don't buy day 1 and don't buy day 2. Wait for day 3, and probably don't even buy day 3. Wait for day 4, actually, because by day 4, the sellers have generally been exhausted, and then you're starting to see the stronger hands coming into the stock and buying it up after that.
So what is really interesting? So I use the 3-day rule for S&P. I use 3-day rule on numbers, right? Just like yourself. But there's those seldom occasions when you get such as a natural disaster, or you get food poisoning. So what I'm talking about is Chipotle, when somebody ended up dying. Or, of course, BP when it had its oil spill, or Volkswagen when it's had its omissions gate. But then, suddenly, that 3-day rule turns into a 12-day rule. And the 12 days that you get, now where were we? This was BP here. The 12 days is when you have such a significant thing happen that the earnings are obliterated. And the reason that it takes 12 days then is because long funds are literally selling out of their whole position. And they're all trying to do it at once. All the bankers, analysts are downgrading the numbers, downgrade. So when it's something as significant as that, you never buy even day 3, 4, 5, 6, do you? You wait until it finds a level.
Yeah. Well, that's right. And also, another thing that I mentioned about Netflix, which we can bring it back to this BP chart as well, but is one of the crucial things is if you're waiting for the 3 days, the next step, the next filter in that process is actually wait for the price to start trading above the previous day's high. And because that then tells you that there is actual buying coming into the stock. Invariably, if you've got a really, really nasty situation which fundamentally changes things, like some of those instances that you've talked about, the selling continues. So you'll never really get the price trading above a previous day's high anyway in those sort of circumstances. So you never get your buy signal until maybe much lower down. And I think that's important because it comes to this point about catching a falling piano or catching a falling
piano. I like that.
Right. It's dangerous, as we know. And so if you're going to try and get clever and try and buy into something that's really falling off the cliff, best to be waiting for some sort of an indication that the price action that buyers are coming in. And
Charles.
Listen, this is never 100% foolproof strategy. Nothing is in the market, right? We always must remember we're playing a probabilities game.
Exactly.
So you're saying, how do I align the probabilities in my favor? You may be wrong, right? And maybe you get the buy signal, and after 3 days, number 4 comes along, it ticks all the boxes to buy, and then it continues lower from there. That's why you have to have a stop loss, and you have to have a point at which you say, well, I'm wrong on this trade, and I'm therefore going to get out, and I know how much I'm going to lose going into the trade beforehand.
And understanding the fundamentals and not just the chart, right? If something is, it trades on 35 times earnings, and you've just seen a 10% downgrade to this year's numbers that are going to follow through to the subsequent years, then that 35 multiple is going to get obliterated, isn't it?
Sure, of course. Yeah, there are exceptions.
So something that completely defies any logic on valuation is Tesla. And where are you thinking on this one at the moment, Gar? Because it's fascinating, isn't it?
Yeah, it is fascinating. So what gets me quite interested in Tesla actually is the way that it responded to earnings last week. The stock initially traded down about 4% in the after hours market after it released its earnings. But then come the trading day, the following day, it recovered all of those losses and actually closed the day positive. And you've got to listen to that information that the market is giving you. If the stock trades up on what perhaps can be perceived as negative news, well, that's often it's useful information to tell you that the share is actually probably going to continue going higher. And in the case of Tesla, it's did exactly that. It traded down after earnings. It rallied into the market, and it's close to new highs. It's not quite there yet, but it's bumping up against overhead resistance, which to me it looks like it's likely to keep trying to push through there. I just want to bring it up on my chart while you've got yours there, Rich, and just check what that level is.
It's fascinating, isn't it? So it's right there from almost November, December last year. A whole world away from December 22 when we were trading at 100 euros.
Yeah, so I'm just looking at the charts in the US here. You know, I've got about $450 is the level in the US. It's what level I've got.
Yeah.
If it needs to break through there to then continue higher. And we'll see now whether that happens. But as I say, the trading action of the last couple of days for me actually has been quite interesting to note, because those numbers were not amazing out of Tesla.
To say the least, down 37%.
Yeah, exactly. But the thing is, the market's looking forward now. It's looking forward to robo-taxi and to the robots, the humanoid robots and all of that type of thing. And of course, it remains to be seen whether they get that right. But as a trader, I'm always looking at the price and saying, well, what is the price action telling me? And I think the way that the stock traded last week after those earnings, which were, as we said, were great.
Yeah.
Was very happy to buy the stock aggressively when it was 4% down, is an indication that it's probably got, you don't want to be bearish on it yet. That's my view.
No, definitely. I mean, it very, very seldom pays to be bearish in Tesla, doesn't it? Because you have to ignore the fundamentals, just like the what we're going to go on to next, crypto. Crypto has no fundamentals really, does it? So you've got to go more with the charts. And what do you think? It looks good in Bitcoin here.
I think it does. You know, Bitcoin has traded down to the 200-day moving average last week, which is at about $108,000 thereabouts, and it's held that, and it's pushed up off that level. That 200-day moving average also coincides with a long-term uptrend, which goes back up, I think it's about 2 years or more. So to me, it's looking good, and that all happens after a period of some nice sideways consolidation over the last few months there, as you can see. To me, that is what we call a consolidation in time, rather, or a correction in time, as opposed to a correction in price, where the price drops sharply and finds support. You sometimes get a situation where a price goes sideways for a lengthy period of time, and by doing that, it kind of works off the overbought condition, and it digests the strength that came beforehand, and then it essentially it means that the chart has built up the energy to then make the next move to the upside. And I think that's what we're seeing in Bitcoin here. So I'm encouraged that it held $108,000 last week, and it's bounced off that level this morning. It's quite strong. We're seeing it elsewhere in the crypto space as well. Ethereum's also up. Solana is up, also held its 200-day moving average. So I think for the time being, crypto actually looks like it's fine.
Primed
it's
and
held
ready.
on to, yeah, pretty much. I think it's revving up, and it's revving up for potentially another move to the upside here.
It's unfortunate. So many people got slaughtered a couple of weekends ago, didn't they? I mean, I'm hearing huge losses around the street from these crypto providers. So that's what's been weighing on it. As soon as that's gone, you know, if you've weathered the storm, then usually you're rewarded quite well.
Correct. And you're right. I mean, I think we've got to go back, was it 2 or 3 Fridays ago when Donald Trump initially announced the tariffs on China. That was what really threw the crypto market into a frenzy. And it was more, oh, look, I mean, it was in the big ones as well. The Bitcoins and the Solanas of the world also got smacked hard. But in some of those altcoins, there was massive wipeout of value. And you're right. I saw over that weekend, there was just a lot of sad faces on Twitter or X
Oh, shame.
around. yeah, around the amount of money that had been lost by some of these guys that were heavily leveraged in some of these altcoins. I mean, the numbers were staggering, millions of dollars, tens of millions of dollars in some
Yeah,
cases.
yeah, it's upwards of
And
$10 billion it was that was liquidated at the lows, wasn't it?
yeah, that's right. And that's, that's real money. That's people's real money that's disappeared. It's vanished, gone
Yeah,
forever. So, but
yeah,
it's a lesson, right? Don't play with leverage in instruments that are so volatile. You've got to be so careful because it
absolutely,
can come back to
100%.
bite you.
Yeah. Right, Joe May just asking us a question. IG, hurry up and launch the iBits, the UK. I think that I know because I have traded it on the stocks and shares account. You can buy iBit. I've owned it in there before, so that's stocks and shares, not CFD and not spread betting. Unfortunately, there are FCA regulations there that you can't buy it on leverage unless you're a professional client. So that's
Yes.
the restriction there.
The other option is also the grayscale Bitcoin ETF as well. If you're wanting to buy the physical, that's the way I've actually gone into it in my own shares account. Is GBTC is the one that I use. But yeah, as you said, iBit is another one. There's a couple of these Bitcoin exchange traded funds that are around that you can trade.
I see you said Strategy had some insider buying. What was the story there?
Yeah, I just saw a note last week in some of the broker research that I get mentioning that one of the directors had bought $2.3 million worth of Strategy last week, which I thought was quite interesting. And it also got me looking at the chart. The long-term chart of Strategy also has pulled back into quite an important uptrend support zone at about $280 per share. So I'm watching for it to hold that level. So far in the early hours trade, it seems like it is holding that area. So I'm inclined to actually go and buy a couple of these aligned to my view on the crypto space in general, with Bitcoin and Solana and etc. all moving up off big support levels. But obviously Bitcoin is the most important one that we focus on here with Strategy, because it is essentially a Bitcoin, it's a leveraged play on Bitcoin, really.
Right.
And I think as long as it continues to hold this $280 level, it looks like it's primed to go a little bit higher from here. And if Bitcoin goes up, no doubt MicroStrategy will also go up with it. And I did just think it was quite interesting to note that there was a bit of insider buying last week.
Do we know what MNAV Strategy trades at now?
It's about $300 in the after hours trade, I think.
Oh no, sorry, MNAV multiple. So is it sort of 1.4 or something?
Yeah, I don't know. Not in front of me right now. I don't have those figures.
Yeah. Just checking, yeah, Smarter Web now trading 60p to 65 pence. So that's trading at a 0.9 times MNAV, which is interesting. So actually trading, the equity is lower than the Bitcoin value.
Okay, so that's interesting. That's actually, so you're effectively buying Bitcoin at a discount in this one.
Yeah, 10% discount. So
I must look at that. It's actually not one that I follow.
Yeah, you can see by the chart there's a lot of pain in that one. So clearly, somebody is a forced seller there that's causing it to trade that low. Martin's agreeing, no iBit on IG. I've got it on my stocks and shares account, on my share dealing, iShares Bitcoin Trust. So I'm not sure if you have to be a professional client or well, you can look into that one certainly, Joe. Okay, what about biotech? Biotech's something I've never really got my teeth into, but things starting to heat up there a bit, Garth?
I think so. I follow the insider trading action in stocks in the US in general to see who's been buying. And over the last number of years, the last number of months rather, there's been several filings of insiders buying stock in several of these biotech companies. And if you start to look at things like the ARC genomic ETF, the ARKG, Kathy Wood's one.
Yeah.
It's been basing. You have to zoom out quite far to see what I'm talking about, but it has been basing over the last while, and in general, just knowing that there's been all of this insider buying happening within this biotech space, looking at the trading action over here in this thing, it looks to me like it's coming back into vogue again. And if you go even further out, Rich, go out like a couple of years even, you'll see how this biotech space has really been beaten up for a while, but it's been making a very, very big base for a lengthy period now. And again, I kind of think of this in the line of the Gartner hype cycle, which I know we've spoken about here before. It's basically where you get some new technology, new thing comes along, and it gets super hyped up, too much, right? And then you get what's called a peak of inflated expectations, and the price then crashes down to earth. And then there's a lengthy basing period, which takes a while to play out. And then you end up, after that, getting the true growth story, which everybody was excited about in the first place, but it actually comes through later on. And if you kind of visualize it, it looks like a backwards S lying on its side, kind of a pattern. But in any case, I think that's what we're seeing with these biotechs now. There's genetic editing and all of this technology. It's fascinating what's going on. But it was all the rage in 2021. And we saw some amazing moves in a lot of these biotech shares at that stage. But they got massively overpriced. It was a huge bubble at the time. And of course, we've seen a big crash in the biotechs since then. But over the last year or two, we've seen them basing quite nicely. And I get the sense that we're now into that growth phase for these biotech companies that was what the market was originally excited about back in 2021 is now starting to actually come to fruition. And we could actually see the rubber meet the road in terms of some actual earnings and some actual growth in these stocks. So I'm excited about them here from not such a short-term trading perspective, but more from a medium-term outlook. I'm keen to buy some of this ARC Genomic Revolution ETF. And the other one you could look at is the XBI, which is the iShares Biotech ETF.
And I assume AI must really take this kind of thing to a new level, doesn't it?
It does, yeah, absolutely it does. And the two do kind of go hand in hand in some respects, yes.
So we're going to have robots doing all our mundane jobs, like the washing of my clothes that I had to do at the weekend, and the ironing. Yeah, you can see I iron. And then, so that's robots, and then we're going to have AI doing all our work. And then we're all going to be genomically perfect, so we're going to live forever. What could possibly go wrong, Garth?
Well, it's a good question. And what are we all going to do? What jobs of the future are there going to be?
Well, we won't need to work, will we? We'll all be supermodels because our genes are perfect.
Yeah, I don't know. It's a strange old world to be going into. It's tough though. I mean, I've got young kids, and I always look and I think, well, how do you guide them into a career? What do you get them to study?
Well,
it's interesting.
Plumbing and joinery, I think, is the only safe one.
Well, this is what everybody keeps saying. But then I guess if everybody becomes a plumber or a carpenter, there's going to be an oversupply of them. We're not going to earn very much.
We don't need jobs. What are you talking about? We're just long stocks. The stock market only goes up. So what do you need a job for? Come on.
We could debate it all day long. It's an interesting world we live in, and it's frightening in many respects. I think the thing is that with every new technology, jobs get lost, jobs get replaced, but then also new jobs do get created. And maybe we're just not thinking out the box enough yet in terms of what those new jobs might be. I don't know. I mean, it worries me, really does, but it's maybe a conversation for another day.
Our good friend in Germany makes a very good suggestion. We're all going to have to get therapy So the therapists will be making a lot of money. The robots will probably be able to be your therapist, or ChatGPT. Just on an interest on the one-day expiry options, S&P 500 today, we're trading 6,845. The Americans haven't even had a chance to buy it yet. So there's just a nice little trade there, maybe a 68.55, so 9 points above where we're trading. Something like the 68.55, 68.70, 1 by 2 for 3 ticks, or either buying it naked or 55 to 75, something like that will be really interesting on the day, because we know with the trade talks going well with China, inflation out of the way, ahead of tech earnings, you might see them buy this S&P into the day. So yeah, maybe a cheap way to play it is that daily expiry option. Garth, any other single stocks that are catching your interest just now that maybe people won't have on their radar?
Well, the one we didn't talk about, which I had on my list, was Coinbase, which kind of goes hand in hand with the crypto space. That's also a stock that has pulled back quite nicely over the last little while. Had quite a big up day on Friday, but it's held long-term uptrend support at about $320, and it looks to be turning up. So if you do believe that there's a leg higher coming in the crypto space, then Coinbase would likely be a beneficiary of that. I do look at that and I think, is that chart maybe narrowing into the apex of a triangular structure and potentially building for a breakout to the upside? Maybe.
Yeah, quite
Time
like
will
that
tell. I think it's likely to be well supported if crypto is doing well. So yeah, again, to me, it sort of ticks a lot of boxes for a potential long trade here.
That's it. And people have probably been nervous about crypto, therefore they haven't bought this one. I'm going to have some of those. I quite like that idea for a bit of a move up. Just a little 35 shares there at 362.96. Good stuff. That'll buy us our a Christmas lunch when we go out for a Christmas lunch there, Gar.
Fantastic. I look forward to that, Rich.
Good stuff. Thank you very much for joining us. Everybody, so sorry about all the hectic ins and outs of the studio today. We had to play Julian Wheeler, but almost worth it to hear his idea on Alcoa that was up 20% since numbers there, since Julian was on the show last week. And thank you very much for joining us and for the patience for sticking with it. I'm sure you'll agree with me, Garth McKenzie, always worth being patient to hear his words of wisdom. We shall see you tomorrow, Garth. Thank you very much. Have a great day.
Thanks, Rich.
Ladies and gentlemen, we are back. This is Overtime. I'm Ilya Spivak here in San Francisco. That's Thomas Westwater and our returning champion, Mr. Mike Butler in Chicago. Gentlemen, this was kind of a strange day. Are we just sitting here waiting, twiddling our thumbs before the gods of economic data finally bestow some numbers on us?
Yeah, we finally get some soon. The one report that they are bringing people back for because it's tied to COLA increase or something. So it needs to be done.
Yes, indeed.
Yeah.
It's actually a 3-month benchmark. July, August, September is the annual benchmarking for the Social Security's readjustment of benefit levels and inflation adjustment window, the COLA. And they are going to do that. So COLA as in cost of living adjustment. And they need those numbers for that annual exercise. So begrudging furloughed workers have been called back into the BLS to burn the midnight oil.
Yeah, it's crazy. But yeah, we're finally getting a little something here. Market is pricing in a 40-point move in either direction tomorrow in SPX. So not nothing, but still an elevated number from what we've seen at least this week. This week we've been looking
Hide your kids, hide your wife.
Yeah, we've been looking at like 25, 30 points from day to day, but a little bit elevated tomorrow with the report coming out here, 7:30 Central. So markets will be moving before the actual market opens, the equity market opens, I should say. So yeah, we'll see what happens.
We got Intel
interesting
up 6% right now on earnings.
There you go. Yeah, they're up 2 points, $38 stock up to 40 right now. The implied move was more than this, that's for sure. Intel had one of the bigger implied moves that I've seen in Intel, period. Over 10% of the notional value of the stock price, around 4 points. It's up 2 points now, but yeah, nice to see. That's for sure. If you're long Intel.
The numbers are,
we
we're expecting just 1 cent EPS. Number came across at 23 cents EPS. That's a pretty good beat. Revenue expected 13.14 billion. It came in at 13.65 billion. So beat on the EPS, beat on the revenue. Stock up. Makes sense.
Classic.
Yeah. Not bad.
Not bad. What else is not bad is this momentous IBM recovery, which we talked about just a few minutes ago on last call, but I don't know if you've seen this chart. It opened at 265 and the market said, wait a minute, who cares about these earnings? Let's pump this thing to the moon. So it reversed the entire sell-off in IBM. Tesla's entire sell-off was reversed also. They ended up closing 10 points higher than the net change on the day, or from the close yesterday. It was down below 420. We closed around 450. Classic move here. 1 day reversal of the entire move. So yeah, I mean, this is nuts. This kind of paints a picture for potential craziness for the other big tech stocks, Apple, Amazon, Microsoft, Nvidia, et cetera, et cetera.
Might also say something about the anticipation for this economic data, because the initial responses from these things tell you kind of what the markets thought of the earnings and go, oh, well, these earnings were crappy. Sell it. Okay. And then they go, wait, but do we really want to be leaning in a direction before we get the first real piece of economic data in 3 weeks? Maybe not. And so let's say this data does nothing. Let's say it comes out non-controversial. We already have well into the high 90s for the probability of a cut at this month's meeting. That's a given. Next month's meeting, pretty much a given. The market has shown really no appetite, and maybe this is just that we haven't had data, but they've shown no appetite to reconcile the disconnect for next year. Markets are way more dovish in their outlook than the Fed has owned up to, but nobody seems to care for the moment. So let's say this data comes in exactly in line with expectations, nothing to extract there, nothing new to price in. Do the markets go, okay, well, we didn't want to sell Tesla because we didn't want to be tilted before this data. We didn't want to sell IBM, but now the data is out of the way. It doesn't mean anything. Okay, now sell it.
Yeah. Interestingly enough, in December, we're seeing a reduction in the rate cut probability. We're up to 8% of a probability that we stay at the 25 basis point cut that's projected for next week. Do you think that's just simply because the market's pricing in some uncertainty around the CPI that is now being reported tomorrow? And then maybe we see it snap back to 99% after the fact if there's nothing crazy?
Yeah, I mean, it seems like it's a little bit fuzzy. And it's always a little bit fuzzy, right? Because there's an element of uncertainty to just not being able to know the future. So until things are well and truly there, it's tough to say. But if you look at this, so today we're at 98.8%. that we're going to get this cut next week. Yesterday, we were at 97.3. So we're creeping a little. A week ago, we were at 96.3, but also a week ago, there was about a 3.5% chance we'd get a 50 basis point cut. And that's how that was lower for one cut, because they were actually even more dovish. We've tossed that 50 basis points out the window. At this point, the market is not betting on 50 basis points. We do have a slight, and I do mean slight, 1.1% chance of no change at this meeting, and that's down from yesterday's 2.7%. So the markets are allowing for a sliver of a possibility, and I mean, you got to use a microscope to see it, that there's no change, but that would have to be, in my mind, just noise. Just the market basically saying, look, we don't have a crystal ball. We have to allow for some level of possibility that we can't see the future with 100% perfect clarity. But as our good friend Mr. Vecchio would point out, when you're north of 55%, close to a meeting, it goes the way that the probability tilts. So if the markets are a little bit better than even on the odds, that's how it goes. And we got the meeting next week. We're in the middle of a Fed blackout window, so none of the officials can speak. All we got to hang our hat on here is this CPI thing, and let's give credit where it's due, the S&P Global PMI numbers, because that'll be one of the few kind of consistent, uninterrupted visions of U.S. economic growth, of cycle dynamics, all of those things. That's coming out as well. So those will be the things we have to look at. And then the Fed. So if we're already in the high 90s, I mean, scratching at 99%, are we going to get back to 50 on the basis of this CPI report? I mean, I suppose it's not impossible, but my God, it would have to be a scorcher.
Yeah, I think this 25 basis point cut is all but guaranteed. I think there's enough time for them to shift for December if there's some
They
heat.
could do a little song and dance for December.
Yeah.
They could do a little shuffle.
However, I would also say if the government stays in the current state of being shut down, I don't foresee that changing either. Like they're not going to make a adjustment without a lot of data to back that up. And I'm looking at prediction markets right now. 42% from the prediction market I'm looking at, 42% have the government shutdown ending after November 16th. So that's another 2 weeks. More than 2 weeks, 3 weeks. That's a pretty big number. Almost half of the bettors are on November 16th plus. What do you think about that? And what do you think that means for the overall market?
I think
so.
The Fed meeting next week, I don't think it matters. I think the inflation report matters a little bit tomorrow, especially because we're lacking other reports, so this report might command a little more influence. But unless it's way outside of the estimates, I really don't think it matters. I think next week the big things are going to be the big tech earnings. I think, not necessarily one, but together, like Microsoft, Google, Meta, those combined with other reports is going to be guiding the narrative more than Fed bets right now, more than the inflation report.
There's an interesting thing that's occurring here, and Thomas, maybe you have some insight on this. Much of this shutdown is basically linked to subsidies for Affordable Care Act premiums. Those subsidies are due to expire at the end of this year. The whole sort of shutdown story is really about we need to extend these subsidies, or premiums for health coverage under the Affordable Care Act will go up significantly, double digits for folks. So on some level, Democrats are seemingly trying to say, well, okay, just keep it shut, let the premiums go up, let everybody see what it is that this is, and it will become politically unpalatable not to extend these subsidies. We'll invariably get what we want. It's a strategy that makes sense, but it's also a strategy that takes us through the end of the year. Because for people to viscerally feel the rise, we might start to look at already the 2026 calendar year. Now, insurers are going to start to let people know, like, hey, by the way, your premiums are going to go up 20% or whatever it is. I've seen a lot of numbers getting tossed around. If you ask some of the Democrats that have been out there trying to make the case, Schumer's been out there, the numbers can get into like 75% in some cases. The average looks like it's 20-ish from what I've read. So maybe insurers start to let people know earlier, and people go, wait, holy moly, my insurance premiums are going to be this versus what they were. And maybe that builds a level of momentum. But it's also kind of a tertiary effect strategy where you sort of hope that people get upset. You hope that they call their congressman. You hope that in calling their congressman and in saying, hey, I'm pissed about this, those congressmen will vote differently to change the negotiation. It's a lot of things that have to happen between people get upset at the prospect of higher insurance costs, and that impacts the negotiation in Washington. Meanwhile, it seems like on the Republican side, they're saying, well, listen, we've been wanting to cut government spending. Obviously, we came into this thing with Doge in hand. That didn't really go as far or where we wanted it to go. But obviously, we've told you where our head is at on government spending. So you want to shut things down? Okay, we'll make some permanent firings then. And so both sides seem to kind of have dug in their heels. It makes you wonder if this is the kind of main thing that the whole thing hinges on. Does somebody finally just yell uncle and go, you know what, this is too complicated, this is going to take too long? And who actually has the leverage? So this might be longer lasting than even the last record, if everybody keeps their heels dug in.
Yeah, I mean, it's going to be long lasting, but the longer it goes and every day, the more pressure builds both on Democrats and Republicans to get something done, because there's federal workers, there's military not getting paid, and, one paycheck, a lot of people, all right, you can cover that. You start getting the 2 paychecks, 3 paychecks, then you're, that's a bad situation. So you got a lot more people going crazy. The other thing is the ACA subsidies expiring. Yeah, the Republicans wanted to push through a bill that would extend it 1 year. Democrats said back, you want to extend it 1 year so people don't feel that pain by the midterm elections in November. So, I mean, I don't know which way this is going to go, because Republicans and Democrats, Republicans more have changed their strategy a little bit on signaling how this government shutdown is going to go. Of course, each side is blaming each other, as they usually do. That's no surprise there.
Standard issue.
Standard issue, right? But how is it going to affect the economy and the markets? I mean, if you start getting to 2-3 paychecks, there's 3 to 4 million government workers when you include military. But there's a broader section of people, contractors that aren't necessarily government employees, stop working or slow down too, especially as you go on longer. So how is this going to affect spending? How is it going to affect things like that? Probably going to see a slight uptick in, credit card usage, all that stuff. So, I mean, I don't think we're at the pain point where it's really, bearing on their shoulders yet, but go past the 30th, go past another paycheck, and then I think you're going to see something happen in the first half of November. Something has to happen. But, it looks like for now, at least the next week, definitely no resolution to the shutdown.
It does look that way, yeah.
And the with the current probability of November 16th plus, that puts it at like 45 days, right? Or more.
Yeah, I mean, we're the second longest government shutdown ever right now. The longest was, I believe, during Trump's first term. I think that was 32 or 36 days, somewhere in between there. So, you know,
It's like a contest. See how long I did last time? I can go longer.
Right. And you notice the messaging. I mean, most people watching here are very informed, but most people really aren't, because you just don't have time working in your busy life to really look into things. And, you know, if you look at the Republican messaging, they're saying Obamacare. The Democrats are using ACA, but there's been surveys done when you tell someone, how do you feel about the ACA versus Obamacare, they feel completely different about it. Even though it's the same thing, when you call it something else, there's a completely different shift in the sentiment around those two things. So that's interesting there. I mean, but how do we trade around it? I think you just keep doing what you're doing right now. And until the market tells you that, you know, we care about the government shutdown, which will be reflected in price volatility, I think you just trade as you've been trading, really. I mean, it's interesting to look at, you know, it'll get more impactful as it goes on, or the potential for it will, at least. But right now, when I'm putting on a trade, I'm not really thinking, how is the government shutdown going to impact this trade? I mean, it's in the back of my mind, but it's not something I'm really considering.
Yeah. I think that's actually, so first of all, incredibly insightful, but secondly, very much reflected in the way that the markets have responded to this shutdown. If the markets were concerned, you'd see it. You'd see the markets really start to kind of get weak-kneed into this, and it's just not the case. And when the shutdown kicked off, the markets almost liked it, because they almost went to this place of like, well, if we weren't sure that the Fed is going to do all the easing that they're betting on, we're definitely sure now. Because with this shutdown, number one, they don't have the data to think different thoughts. Number two, this is obviously a hit to economic growth. You can see it in the way that break-even rates in the bond market have behaved. They've come down. I mean, clearly the bond market is saying this is some sort of disinflation, growth, risk, whatever. And obviously it is, because government spending is an input into GDP. Take away government spending, that's less GDP. It's not rocket science. And so when you look at all of that and you say, okay, from a market's perspective, granted, for the past maybe week or two, the markets have stopped rallying on more dovish positioning in Fed policy expectations. But going into the beginning of the shutdown, they were very much minded bad news is good, because bad news is more rate cuts, and they really haven't stepped off that square, at least as far as the shutdown is concerned.
How do you think this permeates through specific markets related to healthcare? Do you think it's XLV? Do you think it's specific names? I know United Healthcare has a lot coming out in the next couple of weeks. They've got earnings 28th before the market opens, with a pretty healthy 24-point expected move. But they also have a hearing on November 4th, I believe, for the DOJ. And you can see that still kind of elevating this premium here. But XLV, kind of the obviously the ETF, healthcare ETF that you can trade directly with the lowest implied volatility for sure. Do you think you see like a snap reaction? If there is a resolution, do you think there's a snap reaction in something like this? Or do you think it's priced in to the current elevated levels?
It's an interesting question, because as I think about what the CPI might do sort of shorter term, my head is going to, this is if this becomes a thing, right? If CPI comes out and there is something controversial enough in it that Fed policy expectations go this way or that, or the market's growth expectations go this way or that, I don't think it's sector specific in that environment. I think it's more like a risk on, risk off. Equities go to closely correlated moves and all kind of do the thing, whatever the thing is, whatever the S&P does, whatever the NASDAQ does. And that would give you a different starting point as kind of shutdown specific, even earnings specific stuff starts to come out. So the context becomes different. If you spook the markets and let's say XLV goes down, not because XLV goes down, but because the whole thing goes down, because CPI does something. And XLV, let's say, comes in and you hit the bottom of that range there from earlier this month. That's a very different point of context than where we are now, which is sort of attempting to scale the recent highs. So if in that context you then get, oh, the shutdown ends, la-di-da, it's probably good for healthcare stocks, especially if they're down.
There you have it. Thomas, what else are you looking at from a future standpoint? We were talking about how big this oil move was today.
Yeah.
I actually closed. I got long, like somewhere around here. I closed yesterday for $160 winner. Wish I had forgotten to, because that would have been a better close today, obviously with the micro crude long. But I know we've talked on Options Trading Concepts Live about a new range projected or potentially being, in this upper 63, 64 handle down to like 54, 53. What is your summation of the move today, if you have one?
Yeah, I mean, so U.S. sanctions Rosneft and Luke Oil or something, two firms, Russian oil, and they're saying that to China and India,
as it were.
Yeah. They're saying to China and India, if you accept these tankers, you will be cut off from the Western banking system.
Perfect.
So of course, oil big surge because it was kind of unexpected. There was speculation that the U.S. would be imposing new sanctions, but it's kind of been that way for months. So when the news hit, oil prices spike. We saw strengthening backwardation, the near-term contracts, which is opposite of what the trend has been recently. So some supply concerns, most immediate, of course, because all those tankers to India and China are going to stop right away. And then India and China says, wait, we have to get our oil from somewhere else. So that demand is then going to be sourced out to, U.S., OPEC, et cetera. So they won't be getting as much of their nice little discount on it anymore. However, we've seen time and time again that Russia is able to largely go around these sanctions by doing these things like shadow tankers and stuff where you send the tanker out, it meets another tanker in the middle of the ocean, they transfer the oil, do something like that. There's a few ways to circumvent it. So in a few weeks, a couple months, they're going to be able to circumvent a lot of this and do it behind doors where they're not, China feels comfortable taking some Russian oil to where they're not going to get those penalties. But of course, it's an escalation. It hits supply right away. But I sold a call spread, and I did it in the contract only 15 days out because I think we're going to have a quick retracement after this. And that could very well not be the case. But when you look at the fundamentals, there's really nothing that's changed. Q1, we're going to start going into a surplus market. Q2 and Q3 will very likely, according to almost any agency, EIA, IEA, OPEC, and then all the other banks, Q2 is looking like a well-supplied market. So, I think we're going to tread down back towards 60, maybe even go down into the upper 50s. I just did it 15 days out, 62.75, 63.25. It works out. I'll make a couple $100, but really, it's just a sanction-driven, headline-driven move. We've seen these kind of moves, reverse themselves quite often, not all the time, but quite often over the past year. Sanction headlines, things like that, even geopolitical headlines. So that's kind of the route I'm playing this, that it's going to, go like that again.
Yeah, I mean, so first of all, unsolicited plug here. There's a great book out there called Choke Points about U.S. economic warfare from one Edward Fishman that used to work in the U.S. government over a couple administrations, most recently the Biden administration, on these things. And it's a really, really great account of U.S. economic warfare, in particular recently, and really sort of explains how the U.S. has managed to weaponize its economic system to sometimes great effect and sometimes not great effect, because historically, sanctions don't work very well. But recently, they've worked better, interestingly. And probably the biggest sort of successful example and model for this version is what the Obama administration did with Iran, and what they did to kind of get Iran to negotiate the joint plan of action, the quote-unquote nuclear deal, which Iran had no interest in negotiating until they were compelled to negotiate it by this kind of a thing. And what's interesting about this is ostensibly the Europeans are on board with this, because over the course of really the past 3 years or so, there has been increasingly more and more consensus out of Europe that they need to de-risk away from Russian oil supply, which until then was very difficult to get them on that page until Russia launched the full invasion in 2022. Before then, the Europeans were just, say, like when Russia made the land grab in Crimea in 2014. Never mind the land grab in Georgia, or the attempted land grab in Georgia in 2008. You couldn't get the Europeans to say, yeah, we're going to take ourselves off Russian energy. It's just not a point of conversation. The answer was just a hard no. So where the Obama administration was very successful with sanctioning Iran this way, Iran is a small producer and not a pivotal European supplier. So it worked. When they initially did it against Russia in 2014, thereafter, it didn't work because the Europeans were like, well, no, you have to carve out energy out of all of your sanctions because we're not doing it. For the past 3 years, they've kind of acclimated to that idea. This might actually start to bite then. This could really be an important thing. Now, obviously, Russia has been very good at circumventing these things with their shadow fleet and with everything else. They've also been obviously making a point that they can by doing things like dragging their anchor through shipping lanes off the coast of Nordic countries to sever fiber optic cables, just to show people, yeah, we're here. You don't know we're here, but we're here, and we're doing this, and there's nothing you can do about it. So we'll see if that continues to be the case, because it's one thing to say Russia can circumvent this. They almost certainly can. Where the previous round of sanctions, for example, on Iran, where the Obama administration was successful there, was not in trying to compel Iran, but trying to compel people that do business with Iran. And basically saying to countries, you have to choose. Either you want to do business in the U.S. financial system, or you want to do business with Iran. You pick. And obviously people picked. So one of the really interesting sort of aspects here is, yeah, of course, Russia can completely figure this out. But those transactions have to have two sides. And if you make it expensive enough for India and expensive enough for China, but really India, because China clearly is in the midst of its own thing with the US, and I don't think they're in a mood to be any less acrimonious. But if you get India to stop, then you could really do something. You could really squeeze Russia's economy, because India is a huge part of what Russia sells now. So this could work, but it's not going to be in compelling Russia to do anything. They're going to attempt to run these sanctions. They don't have anything to lose. It'll be, can you convince India to really pay attention and really do this? You got a little bit of a sense that maybe Modi is ready to deal on this. We'll see. But if he is, if it's time for Trump and Modi to reconcile on this, and there's maybe a sweetener in the deal, like access to more U.S. exports, et cetera, and the Europeans have rubber stamped this thing, it might actually work.
Yeah, and I mean, this is a way not only to pressure Russia to end the war in Ukraine, because their oil is their war coffers filling up, but it's a way to pressure India too, because you could say, India, if you do a deal with us, we'll turn a blind eye to the sanctions that we put on, even if we don't officially take them off. We'll turn a blind eye if you start taking Russian oil back. Not that that's going to be the primary driver for anything, but it's one thing to consider.
Mm-hmm. Yeah. Yeah.
Do you think?
Absolutely.
Do you think the bid in precious metals is completely coincidental to the move in oil today, or do you think that they're somewhat tied together in terms of like a moving capital into something else other than the E-minis and NASDAQ? Because all three, platinum, gold, silver, all three up over 1.5% today. Oil is leading the way for sure. What are your thoughts on that, on the precious metals sector?
I think it could be in theory, but not necessarily, because, you know, the U.S. flexing its sanction power and stuff like that. Other countries see this, and, you know, it's the same thing as with the trade war. Like, we hold a lot of dollar reserves, let's diversify even further. So if this happens next time it's us in the future, you know, we're not as vulnerable. But I think this is just kind of a technical bounce in actuality. So I don't really tie too much to it. We've had 2 big down days. It makes sense to get a little retracement here. I'm not sure if this retracement will hold. We might have a little bit more downside. Long term, I'm still pretty bullish on gold and silver. So yeah.
Love it.
I mean, I think that's spot. I agree completely. I am actually a lot less optimistic. I think that, frankly, that all you got was this lousy little bounce after the kind of selling that we've seen is actually pretty bearish for the precious metals, because, frankly, this could have been a much bigger deal. This is a big escalation. And it's a big escalation at a time when the US-China thing is escalating too. Frankly, gold might have become a lot more inspired here, because all of this narrative should be very gold relevant. How would Russia circumvent this? Well, considering China is probably not going to play ball with the US on not buying Russian oil, you again get back to this thing, well, why is gold going up? At least in part, it's China is buying tons and tons and tons of it because it is attempting, seemingly, to create something like a parallel system of transaction and monetary settlement rails that people actually want to use. Now, They've attempted to do this for ages because, of course, they looked at what the U.S. did with economic warfare on Iran, on Russia, and said, we're next, obviously, because our interests are divergent enough that they're going to use this on us eventually. So what we need is to insulate ourselves. We need to have backup payment rails, and we need to be able to do business there outside of dollar world. And until this Russian invasion of Ukraine, the story was, well, yeah, that's cute and all. Godspeed. But the yuan is not internationally convertible. There's no liquidity here. Who in the world wants to get stuck holding a giant bag of yuan because your payment rails suck? Nobody. Good night. We're going to do business in dollars. So then you get the Russian invasion of Ukraine, and all of these payment systems start to get giant throughput in settlement volume because Russia can only do business that way. They're already cut out of the dollar system. That's been a very big test of these payments systems that China has built, and generally a successful test. But the yuan is still not internationally convertible. How do you get other countries on those rails then? The most compelling argument I've seen is you backstop the transaction flows with gold. You don't back up the yuan with gold because that would be completely counterproductive. It's that thing that people who seem to advocate for the gold standard don't seem to get. Gold is finite, and that's a weakness, not a strength. Because then you don't have enough liquidity to actually settle the trade volumes as you have them. So you're committing yourself to crushing economic activity and destroying the economy. Good luck. But from China's perspective, if they were to tie the entire yuan to gold, they'd have the same issue. They would essentially ensure that there's not enough of it to do the kind of internationalization that would give them the payment rails that they want outside of dollar world. But if you only back up the settlement of trades within this system and not the whole of the currency, well, then at least maybe you inspire some third countries like Brazil, like Argentina, like India to say, hey, you know what? Don't worry about holding a big bag of yuan. Because all of the transactions here are backstopped with gold. If you got a bag of yuan you don't want, we pledge to give you gold in return. And you can take that gold back into dollar world if you so choose. And so in my mind, the rally in gold has been less about debasement risk of the dollar, which is just obviously wrong because the dollar has been going up and so have bonds. The whole debasement trade idea is obviously ludicrous, basically going back to July. Not before July, but certainly after. It's more like this is a third way. This is a multipolarity currency that allows you to move from China sphere to dollar sphere. So if that's what's going on, and if that's what all these sanctions are about, and if that further inspires China and Russia to build this thing with these new Russia sanctions, you'd think gold would be surging. This is exactly the thing that they want gold for, to counter this. And it can't rally? Get out of here. This thing sucks.
Well, but you could also say that your narrative was priced in on this rally.
Yes.
But is this your thesis?
And now it's turning.
Now it's turning. On low volume, there's not like the difference between obviously crude oil volume was crazy today. Biggest volume we've seen in quite some time. But yeah, to your point, this little micro rally wasn't really anything. Like this is actually the lowest volume in gold that we've seen in quite some time.
Right. But that's the whole thing. Like you got this exact perfect news flow for gold gains, and all you got was this lousy T-shirt. This thing doesn't want to go up.
I would accept a gold T-shirt if it's made out of solid gold specs.
Be very difficult to carry.
True.
I mean, listen, if Slick Rick can walk around with all those chains, it is doable. He's practically wearing a gold shirt.
Yeah, that's fair.
And those things are not hollow, dude. Please. It's Slick Rick.
So you did mention yesterday that EWZ is one of your biggest bullish positions or most convicted bullish positions.
Yes.
Is the narrative that you just ran through, does that tie into your bullish stance here?
It does. It does. I think one of the biggest kind of ways that you see the two poles splitting and countries getting back into a kind of economic Cold War type of arrangement, whereas before you had the Soviet Union and the US and everybody was in a kind of security bifurcation. This looks more like a economic bifurcation, at least until China's population bomb finally implodes and the whole thing resolves itself. Because let's just be serious here for a second. China is not a real adversary or a real contender 10, 20 years forward, because their demographics are such that the entire architecture of that economy is going to have the bottom fall out of it just on lack of humans over the age or under the age of, well, let's call it 60, 50. So this contest need not be so acrimonious, frankly, from the U.S. side. The U.S. need not care about it that crazy, because as long as the U.S. doesn't self-immolate, China has already lost on demographic grounds. But the larger issue, sort of nearer term, is obviously that it's not going quietly. And so as you get this sort of splintering into spheres of influence, if you can't get U.S. soy and corn, you're going to Brazil and Argentina. And Argentina is a little bit funky with Javier Milei over there experimenting with, let's call it Thatcherite ideas and Reaganite ideas, and coming to Trump for a bailout. So it's not going smoothly recently. Brazil doesn't have sort of that immediate political risk there. And they've been very busy finding opportunities to plant soy and corn to be China's sort of number one supplier for those things as the conflict with the U.S. continues. So I think there's a really long arc here for Brazil. The more the U.S. and China fight, the more Brazil wins.
So do you like the real?
I've been doing it this way because I don't think the real necessarily benefits, because it's kind of a backwater as far as sort of currency volumes go. You're going to have to settle this in a different way. And again, like if this is going to be a thing where Brazil is to China on soy and corn what Russia is to China on energy, then it's not going to get settled in local currency. It'll get settled in yuan. And that ultimately, if you sort of look at what's going on with gold, gets backstopped with gold. So really, this is gold bullish in my mind more than it is real bullish, but it's certainly bullish for local stocks, or at least the market seems to think so. So I'm holding. My leaps expire in December and January, and I'll probably roll them.
I'm staying in my silver long position, and you guys can make fun of me next week if it keeps exploding downward. But I'm going to stay in. And
duly noted. Let me write that down. Make fun of Thomas if silver falls. Got it.
Yeah.
Carry on.
But yeah, I mean, a lot of the metals. I mean, we've seen. I mean, platinum has fallen with gold and silver. The one thing, the copper hasn't, but copper's much different. Platinum's closer to precious. It's a mixed precious industrial metal. Copper's more purely economical in its use, and it's been going up. I mean, I think it's almost time to get long copper again once we clear the early October levels. But we've retraced about 50% of this huge drop that we had at the end of July. which came after a huge increase with all that tariff stuff. But now it's returning more to, this narrative that a lot of big investors have put out. And his name eludes me right now. Last year, the big one, he got a big copper position, Druckenmiller. Yes, Druckenmiller got very long, and he's had
Uncle
some good.
Stan.
Yeah, he's had some really good commodity trades over the years that have been pretty large.
Oh, yes.
So, when he takes a trade, he's in it for 2, 3, 4 years, even more. So I mean, I haven't seen anything about him getting out after that huge drop in July, but I think copper has some upside here. And I think, the fact that it's rising as China and U.S. tensions are increasing, there's some, this government shutdown, there's concerns over the economy. I think the fact that it's still rising amidst all this is pretty bullish. I don't think any huge moves like the tariff-driven headline moves will happen again, but I think this is a pretty clear trend upward now. And, especially I'll be taking a long position once we clear those October highs, which are right around 5.2. So going over 5.2, I think, is going to trigger a long position for me.
Yeah, especially with this liquidity pocket here where you just had that huge gap down. There could be a quick run up if you get past these levels that it couldn't get past before. So yeah, I agree with you. I think it's definitely an interesting trade. But yeah, I think silver, gold, platinum, you name it. There are many reasons to be long, fewer reasons to be short. Especially when you tie them into the whole chip narrative as well. Like there's just so many ways that you can be indirectly involved in these big ideas through something like gold, silver, platinum, copper. Like, it's really a pick 'em.
And to your point, right? We know of all these ideas. We just had a 9-week rally in gold before this thing started to roll over. The last time we had a consecutive 9-week rally is the week before we had the last 1 day over 5% sell-off. Like the symmetry here couldn't possibly be any better. The last time that we had a 9-week rally was 5 years ago, ending in the week starting August 3rd, 2020. The last time we had a 5% sell-off like this on a single day was the top in that rally. So, and since that top, gold fell about 19% over the subsequent several months and about $380 in all. But obviously, sort of now that same $380, $390 move, because obviously the price is much higher, would only be about a 9% decline. And we've already done that, really, off the high. So the question is it over now? That's it? Or are we going to get the percentage type adjacency, which would be a much bigger decline? And interestingly enough, the reference point for where that kind of a decline would land us, say we have something similar to that kind of a 19.9, 19.8% decline like we had 5 years ago, that lands us back on about 3,500, which is, shock of shocks, the range top from April, where from about late April until early September, gold basically did nothing and just drifted sideways. So for me, that's the long of longs if we sell off there. Because it looks like a lot of, the pick-em narrative assortment is very much there and it's probably not going anywhere anytime soon. But there does appear now to be a sort of speculative price extreme. Gold is seemingly struggling to even think about a rebound, even as we said today, just seconds ago, on a day where really it should be a lot more inspired. So maybe speculative froth needs to get worked off some here. Just give me a warm CPI number tomorrow and a little shift in Fed odds for December and year. Gold's going to have a conniption. And if it comes off meaningfully like it did the last time it sold off after a 9-week rally, there's going to be a very, very appealing discount here if sort of these general dynamics work like they did or something adjacent.
Everyone heard it here first. Go to the pawn shop, get rid of your gold while you can. Go buy it back in a couple of weeks.
Yeah. Buy it back in a few weeks. 3,500 a troy ounce is what you're looking for. That's really where you want to go. So maybe don't melt your dental fillings, but whatever stuff you got from Costco over the past several weeks, who knows? Maybe let that sit at the pawn shop for a couple weeks. Roll that dice. I don't know.
That's when I knew the top was in. It was probably like right about here when I was like, you know what? Maybe I should go like bring some gold to the pawn shop. When that thought crossed my mind, I was like, this thing's going to crash.
Yeah,
but,
here we go.
No, in all seriousness, take your gold to the pawn shop for sure. But tomorrow, a few minutes left here. Tomorrow, we are getting CPI data.
Mm-hmm.
We are getting PMI data.
Yes.
The market is pricing in about 40 points in either direction. I've got this 0-day iron condor or 1-day to 0-day iron condor on that is now leaning short with this intraday rally. But given the 40-point range tomorrow, what are your thoughts on the result? Inside or outside that number, and in which direction? Thomas, we'll start with you.
I think inside, and I think we'll keep moving up.
That's fair. I hope we're only up like 20 points, so my 1-day iron condor can work out.
I mean, you look at Intel. Intel's put out a big number. The other chip stocks look like they want to follow it. Maybe that will invigorate some sentiment into this market, excluding a crazy CPI report.
Yeah, you've got SMH up 1.5 points after the market close, which contains all of those. AMD up 3 points after the close on Intel's move, most likely. NVIDIA, not as much, but interesting to see. TSM up 2.5 points, 1.5 points. We're seeing a little sympathy on Intel's move. I'm going to say inside down, just because the rally was pretty strong today. I don't disagree with Thomas. I would not be shocked to see a continuation here, but I think if there is a continuation, I think it'll be inside up. So I'm saying inside regardless. Inside 40 points. Ilya, what say you?
I think probably inside, but down. And in my mind, it's inside only really because I think the markets are really starting to perceive a lot of weekend risk at this point with sanctions, and there's a meeting that Trump is going to have with Xi next week, apparently. It's back on now. The APEC conference is coming, and there's the Fed thing next week, which I think is going to really concentrate the selling at the start of next week, but people probably don't want to hold the bag over the weekend. So I don't think you get anything too dramatic. Again, unless the CPI number is hotter than hot. It's already expected to be on the hot side. So the bar is a little bit high. It's got to be hot. And if it's really hot, you get another big wash. And if it's not hot, to that level, their exposure over the weekend. So I think